Hello, guys. Just help me understand if I'm audible properly, because once we start the session, it's very difficult to make changes. Any issues with the audio, video? I'm audible, Jacob. Okay. So there are no issues, I guess, with respect to audio. We'll be starting in a couple of minutes, and once we start, as you know, that will not be stopping. And one more thing, today's session going to be a lengthy session because we have a lot of things to cover. TDS, TCS, and advanced tax provisions. Voice is clear. Okay. Okay, we are starting. When this class will be end at what time, sir? See, probably this class will end in next 3.5 hours. So now it's 9, right? So possibly 9, 12, 12:30 will end it, because my intention is once we start a chapter, we should do it in so much that we should not come back to it. So all the provisions will be covered. And yes, if you feel that you need a break in between, you can take a break of 15-20 minutes. Let's see at what time we'll have a break. Maybe in 9, 10, 10:30 we'll have a small break if you feel that you need a break. Okay, let's get started. And I'm just checking the number of people who are online. Yeah, so we can start. Yes. I'm excited for today's session because there was a break of 2 days. Yeah, everything appears to be fine. So as you can see from the thumbnail itself, today's agenda will be to talk about the TDS, TCS and advanced tax, and there are quite a few of amendments with respect to these chapters also. So it's worth checking those amendments. Along with that, there are certain provisions which are kind of incorporated in the last year, not like new amendments for this attempt, but there is a possibility that you might get a question on 194 N, M, and G. So there are few questions, provisions have been added recently, last year also. And coming to advanced tax also, there are a few things that we need to check. Coming to PDFs, as I promised, under the description only I'll be keeping the PDF. Last 2 sessions I kept it there itself. Just allow me some time to update that, because our sessions are going on till 12:31, right? So just when you wake up in the next day morning and you are asking, it might take a little bit of time for me also to again put it somewhere in the share folder and share the link. So allow at least half a day to update the PDF. As I promised, all PDFs whatever I'm discussing here will be uploaded under the same video, under the description only, but just check it after certain time. Yeah, if you feel I'm not updated, capital gains as well as PGBP, both PDFs have been uploaded there itself. And this also, you check it tomorrow in the second half, like afternoon, you will be finding this PDF also. Let's start. We all know that income tax income tax will pay in the assessment year. Like previous year is a period for which you will be earning the profits or earning the income. Assessment year is the year in which you will be assessed to tax and you will be paying tax. That's what we have been understanding from the basic concepts, though I have not updated basic concepts video now, but it is same every year on year basis. So even if you watch the earlier videos also, you'll find out like our previous year 1st April 2022 to 31st March 2023. So this is a period for which you will be paying the tax. Okay, and assessment year is the period for which you will be liable. I mean, first of all, you will be assessed to tax and you will be paying the tax on also. So meaning you will earn the income in a particular year and you will be paying tax relating to that income in the next year when you file your return of income. Maybe it is 31st of July or 31st October, but the question, or maybe 30th November also if you are involving in the transfer pricing issues. But the question is that government doesn't have patience to wait till you kind of finalize your books of accounts and assess your tax and pay it to the government under section 140 self-assessment tax. They say that, boss, you pay us the tax as and when you earn it. Okay, so like now in the present previous year only you keep paying through different sections. So we have 3 different ways wherein government collects tax from us as in how we are earning. Government doesn't wait for the previous year to end. So one is TDS. Like if I'm providing some professional services to one client, whenever, assuming 1 lakh is a fees, whenever they pay me the money, they will deduct that 10% of that 1 lakh and pay it to the government, which means that I am paying to the government as in how I'm earning the income, or for that matter salary also. Every month we get salary, whoever is working. When they get salary, TDS will be deducted under 192 and a little portion will be paid to the government and remaining amount will be paid to you, which means that TDS is a mechanism wherein government is asking us to pay the tax as and when we are earning it. So again, the same concept for TCS. TDS is like whoever is paying will be deducting it. TCS is like whoever is collecting will collect more. I mean, we'll come to those provisions also. In certain specified cases, when you are selling something, the seller himself will collect more money because they are falling under few brackets. So these are the 2 things, and the third one is a advance tax. And if you are assuming if you are a business, so you will be paying it quarterly based upon your estimation of what going to be your profit for the entire year. You might have heard Akshay Kumar will pay a lot of advance tax, example, because he knows what will be his revenue for the whole year, and then for each quarter he'll be calculating and paying it. So you might say, because it is an advance tax, we can pay how much ever we want it. Not like that. There is a condition, like you have to pay minimum of this much. If you fail to do that, again there are provisions like 234B, 234C. If your assessed or if your estimated tax is lesser than your assessed tax by certain percentages, we'll talk in detail going into the session. You will have to pay interest under section 234B as well as 234C. So now I'm just giving you what we will be dealing for the next I think 3 hours. Okay, one is entire TDS we will be covering. Problems we will be solving very less, or maybe we will be skipping it also. The reason is I want this session to be a comprehensive revision or the comprehensive coverage of all the provisions. Yes, we might take 1 hour more also, but I will not be compromising on the quality or the topics that we cover. Okay, so yes, so generally we pay tax on the self-assessed tax, but these are the 3 exceptions. So this is an amendment recently, I think 1 year back. So you might expect a question on this. I'll be explaining this anyway in detail, but just whenever I say it's an important, so check it with the more conscious eyes. We have already done our other chapters, or we have done the capital gain chapter also. In the capital gain chapter, I was discussing about this one provision, 80IAC. Like whenever you are selling, you are having a long-term capital gain, but you don't want to invest in another residential house, or you don't want to invest in 54EC bonds and all those things. You want to start your own business. You remember that? Yes, I mean last session only we have discussed at the last moment. Okay, so that is a startup like just to push the startup, government has introduced a section. Now the question is like, now you are starting up a business and you are eligible for some relief under 80 IAC. Now comes to the point. What you are doing is you are giving equity to your own employees because you are a startup, right? So you cannot afford to pay more salaries. So what you are telling your employees is that, boss, I will be giving you some ESOP like pool of shares, okay, but I will not be paying it now. You work for me for the next 2 years or 3 years. Put your best effort. Let the company grow. Because the company is growing, when I'm giving you shares, no, that value will also grow. So you will indirectly become, or directly you become a part of the company, or you are the owner of the company to that extent. So it is a motivation for employees to work more or be with the company for certain period. Now the point is that, when do you tax the ESOPs received by the employees of that startup? So if the employer is offering it today, you cannot ask them to pay tax now. Generally what happens, due or accrual, whichever is earlier, whole income tax works on those principles only. But here the law is saying, because there is no value in the share. See, today I started a company, like it's a startup. Nobody knows about my company. Few people I have hired and they are working for me. What value they have? They will not have any value, right? So that is the reason why you are deferring the payment of tax in the case of startup companies. So when you have to pay the taxes after the expiry of 48 months from the end of the relevant assessment year. So if I'm offering it now, now today is 24th March, right? End of the year is 31st March. 31st March 2023 plus 2. But 31st March 2025 tak, you will not be paying tax on the ESOPs that I'm offering it to you, or from the date of the sale of such specified see, you are like, so why should I wait for 2 years? I will sell it maybe in the next year only. Maybe by that time company's value could go up. So if you sell in between, whenever you sell it, or from the date of the assessee ceasing to become the employee of the employer who allotted or transmitted such specified shares. Okay, so whichever is earlier, that is the point of taxation for the government. I'll repeat this point. I mean, you need not mug it up also. You just practically visualize. You joined in a startup because you are a CA, CMA student now. Maybe once you qualified, or maybe during the period also some people hire it. So you joined a company and they are offering you ESOPs. So when you have to pay taxes, if you are there for the company, assuming that you are not leaving it, within 2 years from the end of the financial year in which it is offered to you, like plus 2 years, end of the financial year, say plus 2 years, or when you leave the company, or when you sell the company, whichever the event happens early or earliest, that will be the point of taxation in this case. So this is kind of they might not be asking you in a theoretical way. They might ask you a question like, Mr. X, Mr. A or Mr. Ram has joined a startup company who are eligible under section 80 IAC, have been allotted equity shares of these many, like that they might frame a question. So when is the first point of taxation is earliest of plus 2 years, or when you leave the company, or when you sell your shares, whenever happens first, that will be the point of taxation. Okay, so you can expect a question on this. Generally, maybe if you have completed your salary head, you might come across this section like perquisites. You will be paying tax in the year in which it is accrued to you, though it is also a perquisite, like the employer is providing it to employee, but the taxation will not arise until you sell, until you leave, or until the completion of 2 years. Any question, guys, here? See, a little bit of interaction from your end also kind of motivates me or pushes me to explain, because here you can expect a 4-marker question with the numbers. Okay, any question from your guys with respect to sweat equity shares for startup companies? Clear, right? Okay, so if it is clear to few people, it's fine, I can go ahead. And whoever is watching, not just a few people, don't worry, you can comment. See, by doing comment, not just you are helping me or kind of helping me in reaching to more people, it will also kind of gives me a push to make more videos. Okay, so just a comment, just a like, that itself is sufficient at this point of time. Okay, so that is one part of it. Good evening, Raju. Okay, So now we come to the main section. Section 192 is a salary. Generally, TDS is deductible at due or payment whichever is earlier. That is the case, but there are like 6-7 exceptions wherein TDS will be deducted only on the payment basis. Like I will tell you those exceptions also during the session. But in the salary section also, only when the employer pays you salary, you will deduct the tax. It's not on accrual basis. See, the reason why is that normally employers pays tax before the month. You might have seen it from your parents, your friends, or maybe yourself if you are working anywhere. You will get the salary, like if it is March ka, so you will get salary at 29th of March or 30th of March, just before the month end. So salaries tax is paid while making the payment only. It generally doesn't go to the next month. Okay, so that is the reason why it is like only on a payment basis. You know, when you make the payment, you deduct the TDS and pay it to the government. So for any other sections, we always have a rate like 194J this rate, 194C this rate, 194I, IA, IB, IC. There are a lot of sections, they will be deciding the rate, but for salary there will not be any rate. The reason is that if I am the employer, I might have employees who are earning 30 lakhs per annum as a salary, like as a salary. There might be an employees who are working, who are earning maybe 30,000 per month. Somebody might be getting 3 lakh per month. Somebody might be getting 5 lakh per month. Like big organizations, 10 lakhs per month also people get it. So I cannot, the government cannot decide the rate for these varying salaries, right? So what they do is they will collect some information from the employees, like they'll ask, like that is called declaration. They will ask, what are your declarations? Are you making any investment? If you are making any investment, give me the proofs. If you are having any leave, travel concession, if you are planning to go anywhere, give me the proof. If you are making any ATC deductions or any fixed deposits, so like, you know, right, ATC to ATD, like ATU, there are a lot of deductions. If you are claiming any deductions, just give me the declaration and documents. Or if you are having any loss from income from house property, give me those details. Assuming that you are working for 2 companies, okay, at parallelly you are working, like the permission is given. Generally it is not given to anyone, but the permission is given that you can work for my company, A company, you're also working for B company. So you give the details of the other company, like B company, what is your salary there, all the details you give it to me, then I will consider those incomes also and deduct the TDS, or give these details to that employer. Like if there are 2 employers, what you have to do is give the full information to other employer so that he will calculate properly and deduct the TDS. If you don't give them, what happens is last month whenever you are filing the return, that time penalties might come into picture and you might have to pay interest also. For the simple reason, when you are working for a couple of employees or more than one employer, you have to give the details of all other employers to one employer so that he will consider the other income and he will deduct it. And one more thing, during the period you just changed the job and you went to another company. So when you're joining the new company, you have to give the details of what was your salary in the earlier company, how much you declared, how much you claimed, what was the leave, travel concession, what are the other requisites, perquisites, everything you give it to the new employer so that he will consider that income also into consideration and he'll calculate the rate accordingly. So this is a theoretical way, but in practice we have to do the numbers. But in examination point of view, you might not expect a question on this. So it will be average rate, like assuming that your salary is 15 lakh per annum. So what they do, okay boss, your CT is 15 lakhs and usme se you deduct the employer's contribution of PF, and then are you planning to make any investment? I will consider ATC deductions, ATD deductions, or all ATC to ATU chapter 60 deductions I'll consider. If you are having any loss from income from house property, you give those details. If you are working for another company, that details also you give. If you are joined recently, you give previous employers details. All that I'll consider and I'll calculate the slab rate. And once I come to know the exact amount that you will be paying divided by 12, every month I keep deducting that. But it won't be same, because sometimes whenever there is a increase in your salary, or might not be decrease in salary, but maybe some other benefits or perquisites, changes in the investments or submission, the TDS might differ here and there a little bit. One more thing, we have new tax regime and old tax regime. You have to give a proper declaration of which regime you want to go. I mean, if you don't give anything, the old regime is a default regime. You will, I will be calculating based upon your old regime, like we know the tax rates like up to 2.5 to 5 like that. So if you don't tell me anything, the old regime will be the default one. If you tell me specifically that sir, I want to go with a new regime, you give me a proper declaration, maybe in writing, in a piece of paper, or maybe if you are using any software, there you declare it properly that I want to go with a new regime, then I will calculate your tax based upon the new regime. This is absolutely discretion of the employees. Employer will not decide anything here. So it will be at an average rate, salary के लिए average rate at the time of, maybe in a bits or MCQs you might find this, and based upon the rates in force. I mean, like this year we have different rates, next year again we have different rates. Recently budget has produced and they have given the different slab rates, right? So for that particular year, what are the rates in force on an average basis, they will calculate and divided by 12 they will do it. Okay, so if you want to go with the 115 BAC, that is a tax rates under the new regime, you have to give a proper declaration as to saying that I want to go with a new regime. Okay, and you can give a declaration about the other employees details, and you can say that I am having a loss of income from house property. That also you can write. I mean, if your salary happens to be 15 lakh and you say that okay, 2 lakhs is a loss from house property, then if you say 2 lakhs is a loss, 15 lakhs minus 2 lakhs, 13 lakhs ke upar I will calculate the tax accordingly. So you can show loss only from house property. Any other loss you cannot show. You cannot say that I've invested in stock market and I'm getting a loss, shall I give that? Bolto, we will not consider. Or if you say that I'm having a speculative loss or I'm having a business, first of all you are not allowed to do business, but in case if that is the case, still we will not be taking any other loss, we will not take except income from house property. Okay, furnishing of statement of particulars of perquisites of or profits in lieu of salary by the employer to employee. So whenever employer gives a perquisites, I mean we have a extended session of when you call something as a perquisite. So when employer is giving any perquisite to employee, they have to tell that what is a perquisite we have calculated, what is the amount. So all those details in a statement they will be giving. That is in form number 12BA. If the perquisite value is more than 1.5 lakh, if the perquisite is less than 1.5 lakh, you will give that in the form 16 itself. So people, we will issue form 16 to employees, so that time we will include this also. If your perquisite happens to be lesser than 1.5 lakh, or if he is in a middle management or a top management and you are giving like left to right and center all the benefits to him, you have to give a separate statement saying this is the value of perquisite we are allotting to you, bulk. Okay, and requirement to obtain the evidence. Just now I said that while you are calculating that rate at average rate, you will be collecting some information or some documentation from them. So this is kind of important for your examination. To be honest, in practice it is really important. If you are working in a finance department, you might have to know, you might be aware of this, you should be aware of these facts, that what documents you should submit for each separate thing. Like if you are claiming petrol, what you will submit, or if you are claiming internet bill or telephone charges, like that you have to understand. But for income tax purpose, for house rent allowances, what you have to do is there is something called rent slips. You will find it in any Google also, you will find, or in any station shop also you will find. What is the name of the landlord, what is the period for which you are making the payment, what is the amount, signature of both the parties, you have to sign it, and the other party also will sign it, and we have to submit to the employer, like I am paying this much of rent for this particular month. But overall in a year, if your rent happens to be more than 1 lakh, which means that 8,333 usse upar, like if your rent is more than that, which means that in a year it is becoming more than 1 lakh, right? You have to take the PAN of your landlord also, and then that you have to submit to the employer. So when employer submits this in the internet CBDT portal, they will submit the PAN details of that landlord also, which means that department will have a visibility whether the person to whom you paid the rent of more than 1 lakh, is he filing his return of income, or is he showing this income under his income from house property. So they will have a more control. Okay, so just like completion of reporting, completion of the reporting. So this way the department will be in a better position to assess who is filing the return of income, who is not filing. So if your rent happens to be more than 1 lakh in a year, you have to submit the PAN number of the landlord to the employer. and if you are traveling like you are claiming the leave travel concession, you have to show the bills of the lead. I mean, like in salary head we will be discussing this, no? Like if you are traveling by air, shortest economical distance, like that, you know that. Hello, guys, can someone confirm? I don't know what is day today. We are having a lot of issues. Hello, hello. Can someone confirm if my audio video is proper now? Hello. Okay, now it's fine, right? I don't know, man. Somehow. So thank you. So please let me know if something happens, because I not checking this continuously. Okay. So what I was explaining that time was when we go to hotel and we just lost the tempo. When we go to hotel, we just offer some tips to the bearers, right? Uh, but if you're offering in cash, no issue. If you're offering in credit card, let's assume that we have billed 20,000. Let's assume that we have billed 20,000 and we offered 1,000 rupees as a tip. Okay, so this is a bill, this is a tip. So 1,000, should there be any TDS on the 1,000 which is given by the customer directly to the waiters? Okay, so now CBDT, I know, understand their mentality. Now they are asking, why did you not deduct a TDS from the tips that you are paying to the employees? But what the ultimately Supreme Court has verdicted given is, it is not given by employer. So when it is not given by employer, there is no employer-employee relationship. When there is no employer-employee relationship, what is the question of when it is not a salary only? When it is not a salary only, why is it not? Why is it coming under 192? So there should not be any TDS. Bolke, Supreme Court has given the verdict. Okay, so that's it for section 192. Any question with respect to 192, guys? 192 with respect to salary. If anybody is having any question, let me know. I know there was a little bit of disturbance from our end due to technical issues, but other than that, is there any issue with respect to 192? This is the moment that you can ask questions. This is the moment I can explain it. Later you might struggle or you might not struggle. No need. At the moment only you can ask any questions that you have with respect to salaries. 11 people are watching, so I can understand few people are serious in this, right? Just let me know if you have any questions with respect to 192. And the session going to be very long, so be quick in whatever you are saying. Okay, so next I will go to 192, premature withdrawal from employees provident fund. So now you know that, by now you know that employer will be contributing 12% from your salary from your share, employee's share as well as employer's share. But in case if you happen to withdraw any money from that PF, that is called premature, like before you retire, in between that, if you want to withdraw anything, no, that applicable rate is 10% on payment. Whenever you withdraw, it will be applicable. 10% is the rate. Amount is 50,000. So if you are withdrawing more than 50,000 from your PF, they call it passbook. From that book, if you are withdrawing more than 50,000, you have to pay tax. I mean, it's not that you have to pay, they only deduct the TDS and they'll pay it more than 50,000. So to make sure whenever you withdraw, in case, try to withdraw lesser than that. And if you don't submit your PAN, it will be deductible at maximum marginal rate, like maximum whatever is applicable that maximum rate will be applicable. This is only for theory, guys, but nowadays you might be knowing that all departments, PF department or Aadhaar or CBDT, CBEC, everywhere there is a linkage of PAN, Aadhaar and employee. There is some code they call it, okay, unique identification, some code. So they will be linking it. In case if that has not been done, and if you try to withdraw, it will be chargeable at maximum marginal rate, 30% plus your 37% plus 4%, everything will be chargeable at that rate. And from examination point of view, I know you guys are now just before the examination. I would say just remember the amount. Like sometimes they say that some employee has withdrawn some amount, is there any tax liability or TDS liability, and they again ask you one toka question, like saying that what would your answer be different if the payment is 75,000, like that, and would your answer be different if the assessee has failed to furnish his PAN. So here only you will find all the answers. So examination, just before the examination, like on the examination day when you're going to the examination hall, no, make sure that you read the TDS all provisions, okay, not the provision, just the threshold and the rates. Yes, it is applicable to all persons. So there was something Madhu Reddy was asking, sir, Hyderabad lo coaching unda. At the moment, I'm not conducting any classes. So all I'm doing at the moment is only coming to live and taking one chapter as per the request I'm getting in my comment session. I'm not selling any courses. I'm not selling anything recorded sessions or any live. It's only live. I come on YouTube and it will be there. Okay. If you have any particular point that you want me to discuss, just let me know. We'll come up with the question. Yeah. So next, interest on securities. You know, like financial instruments, you have a lot of securities. When they pay interest, what is the rate? Payer every person. So whenever I say payer every person, it applies to resident as well as it applies to non-residents also. Payee resident. So why are they specifically saying only resident? Because if you are paying any interest to non-resident, 195 section will apply. So just remember, just keep it in your head that default section for a non-resident is 195. For TA1, you remember when we have done PGBP chapter, there also we have discussed if you are making any payment to a non-resident on which tax is deductible, and but you fail to deduct the tax, or you deduct the tax but not pay to the government before the filing the return of income under section 139. You remember that 100% will be disallowed. Same thing, like if it is applicable to them, whenever the payment you are making to a non-resident, the default section will come is 195 unless there is any specific section, unless otherwise provided. Okay, so 195 is a default section. That is the reason why if you are making any interest to only resident, 193 will come. If you are making any interest to non-resident, 195 will come, unless any other provision like 194 LC, LD, like there are few more provisions. The rate of tax is 10%. Time whichever is earlier, like due or payment whichever is earlier, when it is not applicable for few instruments, the section is not applicable, which means that 10%, I said it right, 10% for interest on security 193 is not applicable. See, just by looking at the names you will be understanding this, but as a formality I'll just be running through it on examination day. Just before going to the examination hall, make sure that you read all this. You might get confused sometimes. On 2.5 National Defense Bonds 1972, where the bonds are held by an individual not being a non-resident. So you see, if it is held by non-resident, it is still taxable. If it is like these National Defense Bonds, if they are held by residents, no, it's not taxable. If it is held by non-resident, it is taxable. 4.25 National Defense Loans, 4.3/4 National Defense Loans, where interest is payable to an individual. On national development bonds, 7 years national saving certificates, on debentures issued by any institution or authority or any public sector company or a cooperative society, including a cooperative land mortgage bank or a cooperative land development bank, as notified by the central government. And central government has also come up with a few instructions where it is not like notifications. Power Finance Corporation Limited under section 154 EC, capital gain bonds issued by the Power Finance Corporation Limited. You remember when we are doing 54 EC, you are selling a long-term capital asset and you are getting a long-term capital gain, but you don't want to invest in another house property or in those situations, or you don't want to do anything else, you can always have an option of investing 50 lakhs in a financial year within 6 months from the date, right? So these two are also there. Like on this, not just you will get long term capital gain ka deduction, you'll also get on the interest portion also you don't need to pay tax. Indian Railways Finance Corporation, and 6.5 gold bonds, 7% gold bonds, where the bonds are held by an individual other than non-resident. So again, non-resident ke liye this is not available, provided that the holder of the bond makes a written declaration that the total nominal value of the bond held by him on his behalf did not in either case exceed 10,000 at any time during the previous year. Okay, which means that you just have to make a declaration saying that I'm not receiving more than 10,000 on a part by part. If you are receiving, then this is not taxable. On any security of the central government or a state government, again the limit is 10,000. On any debenture, whether listed or not listed on a exchange issued by the company in which public are substantially interested to a resident individual. However, the interest should be paid by the company in an account to pay check. The amount of such interest or aggregate thereof paid or likely to be paid during the financial year by the company or such a resident individual or HUF does not exceed 5,000, which means that it is applicable for only resident individual and HUF, and the value is not exceeding 5,000 plus company is paying otherwise than by cash, means they are paying through electronic means. And on securities to LIC, GIC, subsidiaries of GIC. So this also you might be knowing, LIC will invest lot of their money into different other companies. Of late, Adani also, you might have seen the news wherein people are questioning like why LIC has invested so much into Adani, because Adani group is going down, and now LIC is taking the hit, and that is the public money. So the question here is that when the Adani pays interest to LIC or GIC, it is not taxable under this section. So that is 193. 194 is dividend. So whenever the company pays dividend, we have to pay 10%. Dividend distributed or paid to it by the resident paid to its resident shareholders. Again, it's only resident. They keep stressing the word resident, which means that only for resident it is applicable. 10%. Before calculation of section 222 A, B, C, D, E. So this I will talk more when we complete, when we do our income from other source chapter. You have something called deemed dividend concept. 222 A, asset distribution. B, bonds or any other instruments. C, company in liquidation, you are distributing some assets to the company. Like that you have capital reduction. D, E, loans given by the company to the shareholder who is having substantial interest. So just I'm giving a background. There is something called deemed dividend also. Before calculating your deemed dividend, on that amount you have to calculate this 10%. No tax is to be deducted in case shareholder being an individual where the dividend is paid by any more other than cash, and the amount does not exceed 5,000. So if you are getting a dividend of 5,000 or less, and obviously nowadays nobody is paying in cash, it's just that from ancestral period these provisions are coming, so everywhere they are saying it, but now companies are not paying, they are paying through bank only, online transfers only they are doing, right? So if your dividend comes up to 5,000, you don't have to pay. I mean, they don't deduct the TDS on this 194 case of say LIC, GIC or subsidiaries, and business trust by a special purpose vehicle. This also is it's a concept. For REITs and InvITs, what they do is they create one business trust, and business trust will invest in a special purpose vehicle, and the special purpose vehicle will do its own business. So special purpose vehicle, what they do is when they earn profit or profit, they will in turn give it back to the business trust only. So when the business special purpose vehicle, it's like one hypothetical entity they have created. It's only like example, say now I am starting one company, on my control only I am creating one special purpose vehicle. They will only take care of CPT, nothing else. I am creating one other special purpose, they will do only accounting, nothing else. So all that profit is my profit only. Put it other way, it's just a pass-through status. So when the special purpose vehicle is transferring the dividend to the main entity, like parent entity, we should not use the word parent, but this is the entity which created that special purpose vehicle. So there is no TDS here. Interest other than the interest on securities, that is 194A. This is important from examination point of view. Whenever I say important for examination point of view, I request you pay more attention to this. whatever I'm reading earlier is not that important, so I'm not stressing so much, but this is something that you might get a question here. Applicability other than interest, on securities. So if it is interest on securities, it is coming to your 193 only. 194A is interest other than interest on securities. Okay, so payer, any person, individual and HUF, I just give a star mark. Star mark ka matlab, if I'm an individual, I'm paying some interest to you. So should I deduct TDS? No, I should not deduct, unless in my previous year my gross receipts or no, my gross sales exceeds 1 crore, or if it is a business, or 50 lakh if it is a profession. So if that condition is not met, I will not be coming under this provision. Not just this section, there are a lot of other sections will come now, like 194C, 194J, lot of other sections. Always I'll be giving a star mark, which means that individuals and HUFs are not under the scope of these sections unless their previous year sales or gross receipts or turnover is more than 1 crore, or if it is a business more than 1 crore, or if it is a profession more than 50 lakhs. Okay, otherwise I'm not coming under the bracket. Now my gross receipts are not more, gross sales are not more than 50 lakhs if it is, because I'm doing a profession, right? So whenever I'm paying anything to this provision like I, C, J, H, I'll not be coming under these provisions. So payee, again resident, I'm just repeating the same provision. When you are making a payment to resident, it will come here. If you are making a payment to non-resident, it will go to 195. Always remember that. So whenever in all the sections you will find payee is resident only. Okay, but for salary, even if you are paying to non-resident, it will come under 192 only. Only that is one exception. So due or payment, whichever is earlier, rate is 10%. Non-applicability of TDS under section 194A. So this is important. As I said, you will I am assuming that you people are CA inter and CMA inter. There will be a question definitely on this. I mean, they will be giving like 4-5 items and they'll say decide whether the TDS is applicable or not on this case, or for this assessable case. So you will definitely be getting at least 1 or 2 bits based upon this. So generally TDS will not be applicable in case if the aggregate amount of interest paid or credited during the financial year does not exceed 5,000. Just compare this with the dividend also. Dividend also we had 5,000 basic limit. Now if it does not exceed 5,000, no need of the TDS on dividend. Same way interest also, if it is not exceeding 5,000, 194A के हिसाब से you will not be paying any TDS, deducting TDS on this amount. The limit is 40,000 where the payer is bank, cooperative society or post office. Remember, when you are deposited in a bank and the bank is giving you interest, it is 40,000. If it is any other people, like any other investment or any other money you have borrowed or taken, it is 5,000 is a limit. But if you happen to be a senior citizen, this limit is 50,000. So you always remember this 5,000 for general people. 40,000 is if it is payer, like if the bank is paying, post office is paying, cooperative society is paying, and 50,000 if it happens to be a senior citizen. So just make sure these provisions are very clear. The numbers are very clear before going to the examination hall. Interest credited by a firm, which means that I am a partner in a firm. So I would have definitely given some capital contribution to them. You remember section 40B. There are limits, right? Up to 12% per annum simple interest. Employer, I mean the firm can pay interest to employee if there is an agreement. You might have heard this. I mean in PGBP I only discussed this. So when they pay interest to me, I am a partner in a firm. The firm is paying interest to me as per the partnership deed, as per everything legally. But should they deduct TDS on that? No. I remember in one of the examination they have given this question. When the partnership firm is crediting or paying interest to the partner, there is no TDS provision. Okay, so they will give 4 cases, like decide for the below instances whether the TDS provisions would be applicable. If so, under which section, something of that sort they come up a question. So when a firm is paying to the partners, even as per the partnership deed also, they will not be deducting TDS under 194A. And cooperative society, just now I said it, cooperative society is paying to their members, just like if partnership firm is paying to partner, cooperative society is also paying to its members. Interest income credited or paid in respect of deposits with a primary agricultural credit society or primary credit society or a cooperative land mortgage bank or a cooperative land development bank. Just by looking at this you will understand, but there is one exception. However, cooperative society is liable to deduct if the total sales or gross receipts or turnover of the cooperative society exceeds 50 crore during the financial year immediately preceding the financial year in which the interest is credited, and the amount of such interest or aggregate amount of interest credited or paid is likely to be credited is more than 40,000 or 50,000. I'll repeat. A firm is paying to partners, no TDS. A cooperative society is paying to its members, no. And again, there are like land mortgage bank, cooperative land development bank. It's not applicable. But again, the exception, there is one more exception. Exception, what it's saying is, if the cooperative society is such a big that their previous year turnover, what is it? Turnover only, no? Yeah. Previous year turnover is 50 crores or more, and in the current year you are paying 40,000 to normal people or 50,000 to a senior citizen, then you have to deduct the TDS. Again, I'll repeat. For a cooperative society, when it's paying to the members, no TDS. But however, that cooperative society, their previous year they are having a turnover of more than 50 crores, and in the current year they are paying 40,000 to normal person like us and 50,000 to a senior citizen, they have to deduct the TDS. Interest income credited or paid by the central government also, it's not applicable, and this so much I have explained, it's not that important. Interest credited by way of interest on compensation amount awarded by the motor accident claims tribunal. So as per motor accident claim tribunal, like some person has met with an accident and he filed a case, maybe he died, maybe their legal heads have filed, so that will go to the dispute, and the tribunal has said that okay, you have to pay 5 rupees. So that person is making a delay in making the payment, so he has to pay interest also. So should he deduct the TDS on the interest portion? Not required. That much of so much details, because that person is a normal person, we don't know what he is having, what he is not having. So no provision, no income tax, no TDS provisions for the interest on the compensation as per the motor accident claims tribunal. Okay, so I remember in one of the examination they have asked this also. And one more thing, interest paid by way of interest on compensation amount awarded by the motor accident claim tribunal, where the amount of such income, as the case may be, the aggregate of the amounts of such income paid during the financial year does not exceed 50,000. So the first thing is, whenever they are crediting it, like the tribunal is crediting no TDS, whenever they are making the payment paid and the amount does not exceed 50,000, no TDS. I mean, like if the interest, generally you understand amount itself is a small amount, on that TDS interest, how do you think that the interest will be more than 50? There's a very rare chances, right? In case if so happens that the interest itself is more than 50,000 rupees, then the TDS provisions 194A will apply, otherwise it will not apply. Okay, so clear. Okay, so you said it in advance, I didn't ask whether it's clear or not, but thanks. Okay, so that's how I come to know whether it is clear or not. Yeah. Next, infrastructure capital company or infrastructure capital fund or infrastructure debt fund, public sector company or scheduled bank in relation to zero coupon bonds issued on after this date, there is no interest component on this. You just try to understand, government is trying their best to invite more people to contribute to this infrastructure, like our country or any country develops based upon the kind of infrastructure that we have. So for that you are inviting people to contribute more in. So what you have to do, you have to give a lot of tax concessions, right? They are saying, okay, when these funds are paying to the general public the interest, there is no interest TDS provisions in that. And SPV to business trust, this also I explained. Dividend also same logic. I'm REIT or InvITs, I'm creating one special purpose vehicle and the special purpose vehicle is giving me interest, obviously I'll be funding it, right? So on that there is no TDS. And one more thing, whenever there is a dispute, no, like assuming for a contract, I'm a manufacturer and you are a raw material supplier. So there you are supplying goods to me, I'm using it, I'm making the payment, all fine. One day there was a dispute, the dispute is relating to 1 crore rupees, assuming. So I filed that case in the court that I need this money. So what the court is saying to the other party, that you pay at least 25 lakh rupees to go for an appeal. So you pay 25 lakhs for going for an appeal. Okay. So now 25 lakhs you pay it in the bank only, that will be in the bank. So bank will be keep crediting or accruing interest. So now should there be any TDS on the interest portion that one party is contributing in the court of law? I mean, as per the direction of the court, someone is contributing. Like you might have heard this, like whenever you want to go for an appeal, you have to deposit at least 25% of the amount in as per some law. Like that, when you are going for an appeal, you are contributing, you are depositing some amount in the court. I mean, like in the bank only you deposit, right? So bank is also giving some interest. So should the interest be taxable in his hand or my hand? Nobody knows it, right? So now the money is in the registrar's hand, like the court registrar. So what the law is saying is there should be TDS on that portion. But when the case finally gets settled, no, like either I win or whether that person wins, at that time the amount will be going to that person if he wins, or it will go to my hands. So whoever wins, they will get the principal portion of that 25 lakhs plus interest portion. So if it is coming to me, I will pay interest or I will pay tax on that. So TDS will be applicable only when the case is finally gets resolved. Until that time, there should not be any TDS provisions. Not that important, but in case if it comes, you can say that if it is in the hands of the Registrar General of Court, there should not be any TDS under section 194A. Deduction of tax at source on interest income accrued to minor child where both the parents have deceased. So it's very unfortunate case. Generally, if one parent, see both parents persist and the marriage persists, they both are alive and marriage persists. Section 64, you remember, right? If any income accruing to a minor child, that will be clubbed in the hands of the parent who has more greater income. You might have known it. But if they are separated, then whoever maintains this kid, under whose control or whose custodian the kid is there, it should be going to his hands or her hands. But if assuming both parents have died, then if that kid is having any income on that, there is an interest portion, the TDS provision, or if so, on whose hands it should be deducted. Generally, they will be creating their own PAN for that person, and TDS will be deducted as per that case only. But if someone like a guardian is coming into picture, like aunts, uncles, or some relatives, and somebody is saying that they are under my custodian, then it will be taxable in their hands. Deduction of tax at source on interest on deposits made under the capital gain accounting scheme. This also will go back to capital gain chapter. Capital gain chapter mein you have a long term capital gain. 54 example, you sold one house property and you got a long term capital gain. So what is the provision? Within next 2 years you need to purchase another house, or within next 3 years you have to construct another house. You know that. But now 2 years, 3 years, you have to invest this money in capital gain accounting scheme, right? I think I have discussed this point also. When you invest this money in capital gain accounting scheme, that there will be accrual of interest, right, on that amount also. So assuming that the person who contributed it has died it. So now at some point legal heads will come, right? So now on whose hands the interest should be taxable? So now the question is, till the time, like assuming 31st July, somebody contributed to capital gain accounting scheme. That person died on 31st December 2023. He's died. Okay. So whatever the interest accrues between this period, it should be taxable in that person's hands only. As per his PAN only. You might say he's dead, how will he pay? So he will have other income, other things, right? So he can do his own calculation, or someone else will do on behalf of him. But post his death, it will be legal heirs. Here, the dead person, the normal assessee, whoever on whose hands the capital gain was taxable. Okay. So this is also very rare, but in case if the institute wants to come up with a very tricky and kind of hard questions, they might ask anything, right? But that's what I said. I will not be compromising on anything. We try to complete everything. It might take 1 hour more also. So now that is a question of 193. So we have covered 192 for salary, 193 for interest, 194 for 194A for interest other than interest on securities. So if you have any questions, just let me know. I'll just take a minute of break. See, a lot of people keep asking, yeah, sir, when is the TDS video is coming? When is the live stream is happening? Then I'm like, okay, I'll have a nice live stream. When I'm coming, nobody's joining, or maybe joining but not responding and only. That's not correct, right? So 192, 193, 194, 194, it's like we are selling in the roadside market. 100 के 4, 100 के 4, 192, 193, 194, 194 ये. Guys, I need a lot of your support. So we have long session. We are still in 194, 195, 196, 197, and then we'll come to TCS, then advanced tax. Lot of energy needs to be there. So you are fuel to my energy. Okay. So now 194B. So B is like like you have a lot of money. What do? You pay games. You will go and invest in, or what do you call that? Horse race may you will participate because you have a lot of money. Okay. B and baga double null. Okay. I assume Telugu people are also watching. Yeah. So now the point is, in examination we don't have to mug up this. Just remember these things. If the amount basic is 10,000 and the rate is 30%, and it applies to both resident and non-resident. It applies to both resident and non-resident. There is no separate section for this. So when the section is specifically saying it's both for resident and non-resident, you need not use 195. When the section is very specifically saying, means this will override the other section. So in examination point of view, you have to remember 30% for winning from lotteries, crossword puzzles and all those things, and 10,000 is a basic limit. It applies to both. That's so important. All other kachra, unnecessary information I have removed it because that's not important for examination. Not just for examination, in reality also, what do you need this much of bigger sentence? You need when it is applicable, when the amount is exceeding 10,000, at what rate? 30%. To whom it will applicable? Resident and non-resident. Okay, but assuming that you pay something in cash and something in kind, it so happens that you won a lottery, not lottery, maybe a game. They are giving you a bike. Along with that, they are giving you 10,000 rupees. So they are paying partly in cash and partly in kind. Like other than cash is kind. So how you will calculate 30%? So you have to calculate entire amount plus 30%. You have to deduct that and then only you pay. And what happens if the cash element is lesser than the 30%? Then you have to ask that person, assuming that one very poor fellow, very poor person, he won 10 lakhs worth of car. So the entire thing is in kind only, right? So maybe some price he might have won. So you cannot simply say that boss, you take the car home. That's what we see in the newspaper and news channels. But that guy has to deduct 30% on 10 lakhs. But 3 lakhs he has to collect it. If he doesn't have the cash, no, you have to sell off this car to someone else and realize the cash. And 7 lakhs you pay it to him, and 3 lakhs you pay to the government, because it's your responsibility. It's not your wish. Or else you feel that okay, no, I will only pay. So then you have to gross it up, thinking that at what value this will become 10 lakhs. You have to gross it up, and the remaining amount portion you can pay to the government. So there is one case study also. Case study is CIT versus Hindustan Liver, HCL. They had some pricing of like 5 lakhs because somebody has won. So they had to deduct 30% both the 1.5 lakh because they don't have cash. They have to collect the cash and pay it. They have to arrange it from their own pocket. So that is your 194B. Now 194BB. Lotteries में बोले तो you are book की what is this color? You are a bookmaker. Your horse races में you are doing this. A person to whom the license has been given, horse racing or arranging, wagering or betting in any race horse, 10,000, 30%. In examination में 194B normal games, and 194BB is all this race horses, these things. Basic amount is 10,000. Percentage is 30,000. It is applicable to both resident and non-resident. That is it. If it is paid in cash, you deduct, and remaining you pay. If it is paid in cash plus kind, cash may say you deduct. If it is not sufficient, collect the money from the other person, and then you do it. Otherwise you don't do it. So case study 1, if you can remember, Hindustan Liver HCL. So next 194C, this is again important from examination point of view, very important for examination point of view. 194C contract. So the name itself is saying contract. So certain sections it's easy to remember, and if you go to articleship also post this, or maybe if you are going now, if you go now also, these are the very important section. 194J professional and 194C, 194I. These three are generally used in practice too often. Yeah. So coming to this, payee, resident, contractor. So only resident, it is not for non-resident. Payer, any person, individual, HUF, star mark. So when I gave the star mark, it means that if you are paying to, you see, I'm the individual now. I am paying some amount to another person, but my revenue, last year revenue is not more than 1 crore if it is a business, more than 50 lakh if it is a profession, then I should not deduct TDS. There is another section 194M. I'll come back to that section also, but for time being, it will not applicable to individuals and HUF whenever there is a star mark. Time of deduction, due or payment, whichever is earlier. So generally we first we due, I mean we credit the we credit in our books of accounts, then we make the payment. In foundation on CPT also we have studied this multiple times. We should not book a direct entry, we should not book a payment entry directly. First we should book a credit entry, accrual entry, and then we should book a payment entry. That's what we keep hearing, and that's what happens in the reality also. So here also they are saying, whenever there is a due in your books of accounts, you deduct and pay it. Maybe you might delay. Sometimes what you think is that I will credit in my books of accounts, but I'll pay once I get satisfaction from the services or from the things that he's delivering it to me. So you are deliberately keeping the payment pending. At time when you credit in your books of accounts, you have to pay to the government. Let's see what happens later. Exception exclusively for personal purposes. So exclusively for personal purpose, I'm an individual, and in my individual capacity I'm taking one contract. Then I mean, like for house construction, I'm taking one personal thing, or for what you say, marriage decorations or anything of that sort of personal level pay, it will not be applicable. And rates, individuals or contract, like it depends upon the payee. If the payee is an individual or individual or HUF contractor, 1%. Other than that, 2%. For a transport business, if they have furnished the PAN, nil, you don't need to do it. For subcontractor also, if they furnish the subcontractor transport business, if they furnish the PAN, no TDS. Again I'll repeat, if I'm making a payment to an individual, a small person, right, individual, how much ever they earn, it's not like they earn in hundreds of crores. So 1% is sufficient, but other than individual, it is 2%. And again, if I'm making to a transporter, assuming for transporting my goods from Delhi to Hyderabad, so I'm paying some amount to them. Obviously, amount will be high only, right? If I'm transporting goods from different states to this state, so if they furnish a PAN to me, I have to collect the PAN. Then that's it. I need not get the TDS for them. Yes, payable, we are only payer. So you think from the payer side, Jacob. See, now I'll take in a small example. We are Reliance company. Okay. So it is always applicable to us. 194C is always applicable. See, section 231, you might have heard this section. Person includes individual, HUF, firm, AOP, BOI, artificial judicial person, like that. There are a lot of things, right? Or government, local authority. So for individual and HUF, unless the turnover exceeds that 1 crore and 50 lakhs, it is not applicable. For others, it is always applicable. For others, it is, oh Rama. So for others, it is always applicable. Hope now it is clear. I am repeating this. Whenever I keep the star mark for individual and HUF, it is depending upon their turnover. You have to check last year, previous year turnover for these two people. But for others, don't see anything. If you are working for a company, you make sure that you deduct the TDS. That's it. I mean, other conditions are far satisfied. But assuming that you are working for an individual and who is having a business, then you see what was his turnover in the last year. Threshold limit is 30,000 in a single payment or 1 lakh aggregate. So it so happens that if you are making a payment and the payment is more than 30,000, you deduct 194C ka hisab se, like 1% or 2%. Okay, but If you are making a payment of 28,000 or 25,000, less than 30,000, you need not deduct TDS here. The reason is that like that is a small amount. So people, what we do, I mean, Indians, we know the various jugards. I mean, even now also they do it. But what we do, we'll split the payment, right? So if I have to pay you 75,000, what I will do, I'll pay 3 times 25, 25, 25. But if I have to pay 2 lakh rupees, I'll pay 25 8 times. Okay, just to avoid payment of or deduction of TDS. So that's the reason why they are bringing this into picture. If the single payment is more than 30,000, you have to deduct. If the entire in a financial year aggregate is more than 1 lakh, you have to deduct this. Yeah. So one illustration is there. I think this illustration is important for examination. Whoever is watching, just pay attention to this, guys. I know only few people are watching, but believe me and trust me, this kind of questions will come. And once we come out, we think that arey yaar galti ho gaya bolke, we feel bad. But once we pay attention properly in any class, no, these are like it appears to be joke for you. Once you pay attention and understand. Okay, I'll tell you, then you will understand. ABC limited बोले तो you need not check that previous year turnover. Okay, limited बोले तो it's always applicable. Makes the following payment to Mr. X, a contractor, for contract during the year: 20,000 on this date, 25,000 on this date, 28,000 on this date. So I'll check, where is my calculator? Yes, it's here only. So how much I paid? 20,000 plus 25,000 plus 28,000. So 73,000 I paid. What is my provision? 194C. You always keep checking the provisions. Okay, it's useful in future also. Who are paying? Payer is a company, so it's applicable. That's it. End of the discussion. Next, individual payment should exceed 30,000. So none of these 3 individual payments are more than 30,000. So it should not be applicable. So I will not be paying deducting TDS on these 3 payments. You understood? And this on this particular date he is paying 30,000, right? So once I add this 30,000, it is becoming 1,03,000. In financial year, the amount is exceeding 1 lakh, right? So now for this 30,000 slot, whenever you are paying that 30,000, you have to deduct the TDS, not just for the 3,000, for the entire amount, 103, whom they are paying. Contract, for a contract, Mr. X बोले तो 1%, 1030. So they have to deduct 1030 in the last payment. So 30,000 which they should be paying minus 1030, 28,970 is the effective amount they will pay it. 28,970. So I will wait a minute, guys. I will wait a minute because I don't want to rush it up. Here you might get a question. In practice also it is very useful if you are working for any finance company, this kind of a provision. And in examination also you get 4 marks or at least 2 marks also. It's not a small number, right? I'll take a small break. Just let me know if you have any question on this. Anyone, any question with respect to this question, illustration 6? I would rate this question to be important. Anyone? Any questions? If PAN is not provided, it is double the rate as provided in this section. So it is 20% or double whatever is given. So it will be deducted at 20%. 20%. So now 194C बोले तो we need to know what is a work, what all will include here. Generally people get doubt here. If you are going for any advertisement, broadcasting, telecasting, carriage of goods or passengers by any mode of transportation other than railways, which means that you are shifting your house. We will not take that example. Your company may, you are shifting some goods from one place to another place through railways, it will not applicable. Other than railways, it will be applicable. Catering, yes, it will be applicable. Manufacturing or supplying of a product according to the requirements or specification of the customer by using the material purchased from such customer, which means I am the manufacturer. What I am saying is, boss, or rather the other way, I am the manufacturer. You are coming to me and saying, Sampath, I want the product to be like this. I am giving you a specification. Whatever the product it could be, I will only give you the material because I want it to be a high quality product. So what am I doing? You are coming to me, you are giving the specification, you are only giving the material, just I am doing the work on and giving it to you. So it will be applicable. Take it other way. You are coming to me, but I already have my own specification, I already have my own material, I am giving it to you. It is like a sale only, right? Sale may, it is not a work. For sale, it is not work. Put it other way, I am manufacturing a lot of items and I am selling it. So it's generally sale. So one applicable. But if a customer is specifically going to the manufacturer and telling the specification and supplying the material by himself or his related parties, then it will be 194C. Deduction of tax at source on payment of gas transportation charges by the purchaser of natural gas to the seller of gas. So these are all case study based questions. Examiner may they will ask 4 or 5 marks. I am telling you, even if you don't write the case study also, if you really know the crux of the entire question, you will able to answer it properly. Like first you give the facts of the case and then point of issue, then provision of law, and then conclusion. Like the 4 points if you can give, no, even without the case study also you will get good sufficient number. Let's come back to this. We get gas at home, right? So what is happening, like Indian gas example. So they are delivering the gas and in that they are making the transportation also. So the transportation of gas from that location to this location to my home is a part of their overall services. So should there be TDS on that? I mean, assuming that I'm a company and we are doing all these things and not like individual. So should there be TDS on that? Not required. Not required, because they are doing it as an integral part of their entire thought process of delivering the goods to me. So transportation is not a criteria here. So now you cannot say that because they are into transportation, we have to deduct TDS. Not required. But if they hire third party and give it, no, that time it will be applicable. But generally it is not applicable in this case. Applicability of TDS provisions on payments by broadcasters or television channels to production houses for production of content or program for telecasting. This also I will give an example. We are a company. We are a beauty items making company. Let's assume that way. Okay. So we need a proper ad. So we are going to one production house, like who will make the ad for us. It's not that we can do it, right? They only have everything in place, all models, all setup and all creativity, everything is with them. So we are going to them and telling them, boss, we need an ad. Our idea is like this. Maybe you can improvise a little bit on this idea, but I want it to be on this duration of this size. It is specifically for YouTube, or it's for short, or it's for reel, or for any website. So I am giving you the entire specifications to them, and as per that specification they are kind of making that based upon, if I am saying that okay, this ad is intended for a rural area kind of a people, so they will have their models accordingly. If I say that this is intended for a metropolitan city or city area, they will have a different thought process, right? So if they are acting as per my specification and giving it, so it's just like a contract only. Just now I said it, right? For a manufacturer, a customer is coming and giving the specification and supplying the material. Here also I am going to them and telling my specification, right? So it is also a kind of a contract. So it will be chargeable under 194C. Or else they already have an ad, they already created, and they are like, okay, for your intention, if you want, you take this bulk. They are giving it what is readily available with them. It generally doesn't happen, but if in case if it happens also, If they have readily available thing and they are giving it to me, 194C will not be applicable. Take another example. There is a music director. I mean, this is an example, not to quote for this, just for your understanding. There is a music director or someone. We are like making one ad. So we are going to him and saying that, sir, we need one music which is of this sort, like this. And so he's like, no, I already have one song I already created and it is there. So if you want, you take it, that okay. So he's giving it to me, which is already created by him long back. So 194C will not be applicable. Now I'm giving you the whole scenario. On the basis of that, he is creating that and making an experiment and doing it for the first time, right? Then 194C will apply. Just an example, but you quoted in the television sector. So that is your 194C. I hope it is clear. 1% if it is individual or HUF. Other than that, 2%. 30,000 single payment, 1 lakh overall payments. Due or payment, whichever is earlier. On if they are splitting the payment when they cross the limit of 1 lakh, then we will deduct the TDS on the entire amount. Next, 194D is your insurance. So we'll just do a quick revision. 192 salary, 193 interest, 193. So 192, 193, 194 interest other than interest on interest on securities, 194A in other than interest on securities, 195 we are not yet come, 194B all that games, puzzles and all, 30%, 10,000 limit, 194BB horse races may again 10,000, 30% limit, and now 194C contract. Okay, 2%, 1%. Applicable to all payers. If it is individual or HUF, your previous year turnover needs to be seen, 1 crore or 50 lakh. And coming to 194D, so generally to remember like this, just to match it. 80D also, when we do the chapter 6 year deductions, 80D is for your insurance, health insurance, 80C is for life insurance, 80D is your health insurance. Here also 194D again insurance, but it is not for us, it is for the one who sold insurance to us, insurance commission. So another way of remembering is like, generally again, not to take it seriously, only for death we will, only to protect family from death we will take it, right? So death D, that way you can remember, just for remembering purpose. So again, if it is exceeding 50,000, see for 194B and BB it is 10,000, 10,000. For a year it is 15,000. Earlier this also used to be 10,000, but I think 2 years back or somewhere they have increased it to 15,000. So when an insurance agent selling the insurance products to the clients and getting insurance commission from their insurance company, assuming I am working for LIC, I am selling insurance contracts to the insurance policies to the customers. When I sell, they will give me some commission. Okay, if that commission happens to be more than 15,000, they will deduct TDS under 194D and the rate is 5%. Remember, 5%. Due or payment, whichever is less. So this is in the hands of the insurance company. You understand, insurance company when they are paying insurance commission to the insurance agent. Okay. Clear. GTA, any exemption? So if they provide PAN, it's not there. And there is another some condition, if they own not more than 10 vehicles. Yeah, so D is for insurance commission paid by insurance company to the insurance agents. And DA is again, see, whenever there is another word, so I understand it's an extension of that. So DA is payment in respect of the policy. So this is in the hands of the policy holder whenever they receive surrender value or death amount, sum assured, whenever they receive that money, generally it used to be exempt altogether, like, okay, whenever they receive money from the insurance company, it is exempt, but you have to go to section 80C. 80C may there is a provision that your insurance premium should not be more than 20% of sum assured, or 10% of sum assured, or 15% of sum assured, depending upon when you have taken. If you are suffering with any disabilities as per section 80C, 80U, it can be 15% of sum assured if it is taken before 1st April 2013, I guess. So before that it should be 20%. It should not exceed 20%. After that it should not exceed 10%. You remember that. So if you are fulfilling those conditions and you are receiving the sum assured from the insurance company, it is not taxable. But in case if you don't fulfill these conditions, it is not exempt under section 10. I'm repeating this point just to connect multiple dots. As per section 80C, if you fulfill the conditions of 15%, 20% and 10%, you forget about the 20% because that is long back. 20% and 15%, if you fulfill these conditions, it is exempt under 10D. But in case if you fail these conditions of 80C, it is taxable under section it is taxable under section 10D. When it is taxable, when the insurance company paying to the policy holder, they will deduct the TDS under section 194DA. But the amount should be more than 1 lakh and the rate is 5%. So for single payment, aggregate payment, bole to aggregate, okay, in a year, in a financial year. So any question with respect to 194DA, because see, as I said, income tax you cannot learn in an isolation. You have to connect a lot of dots and you need to have a lot of patience also. Once you have that patience and able to connect the dots, no, they are like closed ends, it will never be opened. So 80C, 1010D, 194DA, if these three dots if you can connect, your topic is good. Okay, 80C may they are giving a condition of 20%, 15%, 10%, and if you fulfill those conditions and you receive anything from the insurance company, 1010D ka hisab se it is exempt. But if you fail those conditions and if the insurance company is paying you the sum assured or surrender value, whatever the case may be, they will be deducting TDS under 194DA if you fail the condition and the amount paid is more than 1 lakh. Any question with respect to these three? See, though it's a revision session, but I'm going and touching all the dots. If you really want to understand, you can connect the dots. Anyone, any question, guys? See, I don't know, at 10 o'clock or 10:30 only you people are going for sleep, huh? Okay, any questions? Anyone? Jacob, any question from your end? Long way to go for our session. 10D is insurance agent's commission, 10DA sum assured we are receiving from the insurance company. Okay, there are few illustrations. I am not doing it because we have less time, but all these points I have discussed in the words. So if yes, correct. But that is a theory. In practice, what happens is they will give a declaration 194, 197 bolke there is a concept. You have to go to the assessing. I'm not liable to be taxed because entire year my commission is assuming like 4 lakhs and 5 lakhs, and if I plan it properly, my tax liability will come to officer for giving a certificate. So you will be asking your assessing officer, that assessing officer will be giving a certificate 195, 197 ke hisab se lower deduction of TDS or no deduction of TDS as per the case. That certificate you will be submitting to your company, like whoever is a deductor, you will be submitting to them and they will consider that and they will deduct less they will deduct no tax as per the certificate, and the same certificate they will be again submitting to the CBDT saying that because of this certificate I have not deducted TDS. So whenever the tax audit happens, the tax auditor will check that why did you not deduct TDS at appropriate rate for this person. You can say that we had a certificate from that person saying we want to deduct a lesser TDS, so we deducted lesser TDS. So now I am kind of completing the circle. Now, is it clear? It's not always this. You can ask for a low TDS certificate from the assessing officer. Generally, people do ask, and they get the certificate and they submit to the deductor. So he will say that okay, you instead of 10% you deduct only 5%, or instead of you don't deduct at all. Like that, they will take it. Okay. 50,000, 15,000 above. Threshold 15,000 above. 1 lakh and above. So it's all above. I didn't write it. Yeah. So now we will go to the next one, payments to non-resident sports person or sports association, 194E. So E is like for entertainment purpose only, we will watch cricket, right? So just to keep the cricket in your head, because that's the only thing that we enjoy. I mean, at least for me. So what here is that when you are making a payment to a non-resident sports person, Ricky Ponting is coming, Adam Gilchrist is coming, Matthew Hayden is coming, McGrath is coming, all Australian names. So they are coming and giving commentary, and they are writing articles in various places. CricBuzz, they give commentary, they get paid. Okay, nobody is doing it for free. So for all these people, if you are paying anything to them, you have a specific section 194E. Under this section, you will be deducting TDS, not 195. I said 195 is a default section, but if there is any other section which is specifically talking to a non-resident, we have to abide by that section. So now coming back to the provision, this section provides for deduction of tax at source in respect of any income referred to in section 115 BBA. So in like 115 BBA, we'll talk about certain income, and they will be taxable under 194E. So don't think it's a different section. Under that section, there you will be deducting TDS as per the rates given under 194E. So you have to read both the 194E and 115 BBA in conjunction, or in simultaneously you have to read this. So it will be applicable to non-resident sports person. I said you can take any football players also. I don't know any names. So non-resident sports person, including athlete or an entertainer who is not a citizen of India. So entertainer bole to these people, they come for and give the concerts, right? So they sing, and people go crazy, and they come in lakhs of people. Okay, what do you call that? DJ ke liye, or they sing songs and people all come. Can someone give me one name? All that white people come and we all go and watch those concerts. I never go. Justin Bieber or someone like, when they come, people go in numbers, right? So when the organizer is paying to that entertainer, they'll be deducting tax under 194E. Okay, so a non-resident sports association or institution, sometimes whenever there is a bilateral series, bilateral agreements, okay, so they also come and ask them. So we will be paying something to their institution, that also come under 194E. Rate is 20% plus surcharge. See, for normally surcharge will not be applicable. The exceptions is in 192 salary may, whenever you are calculating the effective rate, if an employee happens to be a high level employee and his salary is going in lakhs, surcharge will be applicable. And one more thing, for when you are making a payment to a non-resident, right? So when you are making a payment to a non-resident, that person will not come and do anything, right? So we will charge everything now only. So it's higher education cess also we will charge now only, education cess. Okay, health and education cess, sorry, now our name has changed, right? So this 4% surcharge, if it is applicable, in that also you will include, depending upon the amount you are paying, and education cess also you will include. Remember, only for non-resident it will be like this. For us, directly 10%, 2%, 1% will not include that education cess. Yeah, so 20%, whichever is earlier. What all income will come? Participation in any game, like Now, who is a famous cricketer who is coming for IPL this time? Ben Stroke, okay, or Williams. Like whoever is coming and who are participating in IPL and we are paying to them, no? So they will come under participation in any game. Sports in India. However, the games like crossword puzzles, horse races, taxable under section 115 baby are not included here. So when example a cricketer is coming and is paying horse races and all, no? So but at that time that section only will apply. 194B only will apply. 194BB only will apply. 194E will not be applicable. Okay, this is a long provision. Actually, I will tell in other sessions. But for now, this section is like having a limited scope. You have to come here. You just have to play participation, advertisement. Lot of people will come for that Kingfisher divided by teams, united by good times or something like that. So just you have to be in advertisement and contribution to any article. You can write any article, sport in India, newspaper, magazines or journals. So these are all things that are covered. So if you cover these three things and then as per 194E you will be deducting tax at the rate of 20% plus surcharge plus education cess. And I'll tell you one more provision. If that person does not have any other income other than this, and the person who is making the payment to that non-resident is deducting, then the person who is coming and participating, no, he doesn't have to file the return of income. That is not required at intermediate level, but for understanding. Payment in respect of okay, any question with respect to 194E? Any questions? Yes, it's a very low response, as always the case. Any questions, anyone? Okay, I'll move. Payments in respect of deposits under the National Savings Schemes 194EE. Like National Savings Scheme, if they are making you any payment and amount is more than 2,500, 10% will be deductible, and it will not be applicable to legal heirs. Like if the person is dead and the amount is received by their family members, then there is no TDS. Sir, if Saurav Ganguly goes to commentary for match in London, no. See, we can make laws in India. We cannot make laws in London, right? Jacob, Chris Gayle, no, anybody can come. But the question is, it is applicable for India. A non-citizen, I mean, it's you cannot say that. See, Virat Kohli is also participating in that IPL. So for Virat Kohli, this section will not applicable. Okay, it has to be somewhere. I read it also. No, who is not a citizen of India? He has to be a non-citizen. This section 194E will be applicable only for a non-citizen. Give me one good singer name. Like we people also conduct concerts, right? Like people come, like Devi Prasad example, or Ajit Singh. They also conduct. People come in large numbers. They cannot come under this section and say that I'll pay tax only 20%. No. It's only for a non-resident. Sorry, not a citizen of India, non-resident, not a citizen of India. See, some example I'll give you. Irfan Pathan example. So continuously in London only for whatever the purpose. So he has become a Taylor Swift. Okay. So he has become a non-resident. You know that section 6 ka residential status will calculate, no? He has become a non-resident. Now he is coming. So now he cannot take this shelter. Yes, he is a non-resident, but he is a citizen of India, right? So these two conditions has to be satisfied. He has to be a non-resident and he has to be not a citizen of India. Okay, Taylor Swift, Shreya Ghoshal. Okay, so I'm not really good with the names in the entertainment field, but thank you whoever has given the answers. Correct. Okay. So now you understood, right? Non-resident, it has to be a non-resident, he has to be not a citizen of India, and he should not participate in any other game for him not to file the return of income. But if he is participating in any other game, example like lottery, no, that he has to pay separately at 30% and this separately at 20%, and he has to file a return of income. That is at a final level, so I'm not discussing detail into it, but at an inter level, I understand you people are at inter level. So now only these three, he has to participate in any what do you call this, magazines, journals, and contribution to articles. He can go for advertisement, and he can participate in the game. And concert also same thing, 20% will be applicable. Exam you can expect these questions. See, 194C, 192, 194I, these are all chutke bole to people already know it. So if the exam has to be happening in a soft way, no, they might ask questions very simple. 194J, everybody knows that. If they want to twist a little, no, they'll go to tougher provisions. So this is again one kind of a at a final level provision, no. So there's a possibility if they want to twist you, or they want to get the percentage less, they want less people to pass, no, they will ask questions which are more of a final level questions. Okay, yeah. So next, repurchase of units by mutual funds or unit trust of India, 20% at the time of payment. So this is also, you remember, 20% for mutual funds whenever they purchase, like when we purchase mutual funds, sometimes they will repurchase us, just like buyback of shares. So they will be, you remember 115Q when I discussed this, when the domestic company is purchasing by buying back its own shares, 20% plus surcharge plus education, same thing, like mutual fund is purchasing its own units, so 20% they will be deducting at the time of payment. So that is one thing. Now 194D, 194G commission, 194H brokerage, these three you read it at once. These three are same. One is for commission only, agent ke liye commission. Okay, G is like a commission on sale of lottery. You are opening one shop just to sell the lotteries. Okay, like state government gives that permission. So when you sell this, no, so you will be paying, like when the government is paying making the payment to you as a commission, they'll be deducting under 194G. H is like a brokerage, it's for everyone, but brokerage. So D, G, H, you read three at once, like all same provisions. Amount has to be 15,000. I said it for insurance commission also 15,000, 5%. Here also 5%. DUR payment, whichever is earlier, there also same thing. And 194H commission. So commission again 15,000. Okay, and the rate is also 5%. One point I would like to read it, guys, which I feel is important that you might have to know. For professional services, it is not applicable. So commission or brokerage you pay it, no. Sometimes you pay it as a professional services. Example, side say, if I'm preparing a project report of 10 crores, okay, project report bolte in theory we'll have something, but in reality that with that project report they will go to a bank or a financial institution or a venture capitalist to raise more money. So I have to be like very careful in doing that project report. So what I say is, I need 1 lakh rupees as a fees plus 0.01% of the amount that you raise, example some percentage. So that commission that I'm receiving, or the commission I'm receiving, is not for selling anything or anything of that sort. That is more in the professional nature, right? So 194J will be applicable in that case. Yeah. So further, there would be no requirement to deduct tax at source on the commission or brokerage payments to BSNL, MTNL to their public call centers for franchises. So BSNL, MTNL got public call office franchises, like local people, you find these franchises everywhere. There will not be provision of TDS. So just remember this one. This is not that important. This is more important. MTNL, just see, because the MTNL just to kind of give them a push. Government always does this. Any government entity, public sector undertaking is going little low, no, they'll come up with the better provisions to help them. So this question I'm not doing it. We don't have time. But directly I'll tell you the example. From Hyderabad to Delhi, the ticket price is 10,000 rupees. Okay, so I am the air travel agent. I will talk to them and say that give me this ticket, like some number of tickets at 7,000, and I will sell it. If nobody is purchasing, it's my risk, my loss. So Indigo is giving me 1,000 tickets, example. So this is my cost per agent. My cost is 7,000. I can sell it for 7,500. Now to different customers, I'll sell it at different rates because of my time to travel. Like if it is like very late, so I have to rush up and selling my tickets because they end up unsold. If there is so much of time, I'll be selling at a lesser price depending upon the operating facilities, capacity, time, everything, guys. Okay, so I can sell it at any price. So I really don't know at what price I'll be selling these tickets to my customers. So now I cannot say that okay, 10 tickets I sold it 7,500, 10 tickets I sold it at 7,600. It's difficult for me to maintain the track and difficult for the airlines also to deduct TDS on this provision. So the basic fare and the actual amount that you paid, you cannot say these two are the differences on which you have to deduct a tax under 194H is a wrong thing. So the case went up to Qatar Airlines case mein. It went up to Bombay High Court and they said it is not possible for them to keep a track of the rate at which they are ultimately selling to the customer, and it is very difficult and time consuming. Don't have any don't deduct any TDS on that. It's okay if you don't deduct it also. Okay, so that is a case study, so you can expect a question around it with a different name. So they don't say Qatar, they will say Indigo or SpiceJet, Akasa, some other name, Air India, something like that. So this television ka example I'm not reading, but I'm just telling you the crux of it. If you make the payment to a production house with a specification, 194C will apply. Without any specification, you're already purchasing a content already created by them, 194C will not apply. If any other provision is there, 194M, any other provision, the case study doesn't talk about which section. They'll say if any other section is applicable, let's go with that section, but 194C will not be applicable. Okay, they are saying it. So I'm just repeating once for the people who are still there. We have started with 192, 193, 194, 194A, 194B games, 194BB, more games, 194C, 194D, commission, 194DA, sum assured you are getting on lapse of it or surrender value of it, 194G, H. Now we are going to I. Okay, so rent, I is rent. So rent who has to pay bole to, it is applicable to every individual except individual and HUF. So for individual and HUF, this section will not be applicable unless their turnover in the previous year is 1 crore if it is a business, or 50,000 if it is a profession. Okay, so 2% in respect of rent of plant. If I'm taking a plant on a rent, I have to pay, right? When I pay the rent, I have to deduct 2% for plant, rent of plant, machinery and equipment, 10% for rental of others. Others bole to building, very specifically land or building or both. Okay, it can be factory building, it can be anything of that sort. You can understand from here. Factory building or furniture or fittings. So in examination, you remember like this: payer, it applicable to all except individual and HUF. It is applicable to individual and HUF also if the turnover 1 crore or 50 lakhs if it crosses. And payee, if they are paying to paying for rent on machinery, plant on 2%, otherwise it is 10%. Land building or factory building or any land appurtenant there too. So no deduction shall be made under this section from rent credited or paid to a business trust being a REIT. REIT, these examples also I told, right? Special purpose vehicle, I am creating it. I am the business trust, I am creating a special purpose vehicle. First they are paying rent, you remember 193, not liable. 194 they are no, giving the dividend also. Not TDS. Now also 194 I may REIT बोला तो real estate investment trust. At final level it has in a detailed way. REIT बोले तो that will only deal with the infrastructure or development of investments. Okay, infrastructure investments only. So when they pay me rent, when they receive from the client, they will pay it to me as it is. When they pay it to me, like it's just like a pass through status, there is no TDS on that. It has to exit, then only you will deduct TDS under section 194I at the rate of 2% or 10%. But there are a few exceptions. One is no requirement to deduct TDS under section airport. You will be using a lot of services, right? You will be using the washroom, the lounge, whatever there is, you use everything, right? So now someone has to maintain that. Who will maintain? That airport authority, that no, whoever owns that they will hold, they will own it. They will only maintain it, but they will not collect it from you. You will not pay anything for washroom. You will not pay it for walking. Everything you will not pay it, right? That will be paid by the airlines only. Whoever the airlines are using or landing there, they will be collecting some amount from the airlines. So you are a passenger. Passenger service as it is. Okay, passenger service fees, that is paid by the airlines on behalf of you to the one who is operating it. So should there be any TDS? There should not be any TDS on this element. So service tax portion. So this case study was audio disturbance. Huh? Let me check. Hello. Guys, let me know if my audio is having any issues. Let me know if my audio is clear now. Settings sometimes they change automatically. And we are not very technically sound people here, okay? Anu, Lalit, Jacob, anyone can confirm if my audio is fine now? Good to continue. Can someone confirm once, please? It's fine now. Okay. So what I was saying was, should the TDS be applicable on the service tax component? Like earlier 1994 Finance Act के हिसाब से we used to collect service tax. Don't worry, we don't need to study anything of that sort now. But if it is separately billed, if it is separately shown in your invoice separately, now service tax के जगह में now we have GST, that's it, okay? But the same analogy we can find. If the GST is separately, if the GST is separately calculated, if the GST is separately calculated or shown separately in the invoice, you need not deduct TDS on that portion. Okay. So just remember, you need not go with the service tax portion or GST portion if it is separately included. See, but whenever you take the advance, no, it is not clearly visible when is what is your service portion and what is your other portion. That time you have to deduct on the entire amount. Yeah. So next, clarification of applicability of TDS provision of 194(8) on lump sum lease premium paid for acquiring long term lease. See, whenever you pay long term lease, this is for final generally. When you pay one time premium for the long lease, example, I'm taking a lease of 99 years. Okay, I'm giving you 10 lakh rupees. It's only lump sum premium, but it will never be adjusted against my future lease payments. So should there be TDS on the lump sum premium I'm paying? Maybe if the lease term is 20 years, 30 years, like long term. So the clarification given by BDT is that no need, because you are eventually not adjusting this lease payments towards or against the lease payments, right? See, every month I pay 10,000, but at the moment I'm paying you 10 lakh. So the 10 lakhs is never adjusted against the 10,000, right? So it is not having a color, it is not having a character of a rent. It's just an advance. So no TDS on this portion. Hello. 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 No voice. Huh? Today time is testing me like anything. Hello. Hello. Is it clear now? Things are testing me, guys. So it's only the. Can I continue? Now it's clear. Someone is saying Rajashekaran. Yeah. So my point I was discussing. Someone ABC Limited took on a sublease a building from J with effect from this date on a rent of 25,000 per month. It also took on higher machinery from J with effective from this date on a higher charges of 15 per month. So he is taking two things. One is 25,000 rupees per month for rent and 15,000 rupees per month rent for higher charges. ABC Limited entered into two separate contracts with J for subleasing of building and as well as hiring. The rent of the building and higher charges of machinery for the financial year, these were 1,75,000, 90,000 respectively. For building I paid 1,75,000, for machinery I paid 90,000 respectively, which were credited by ABC Limited to the account of J in the books on 31st March. So now the question is, rent is separately, I have entered an agreement rent for 1,75,000. I rented another agreement for rent of building, another is rent of furniture 90,000. What was our condition 194 I के हिसाब से? Only if the payment exceeds 2.4 lakh. So individually they are not exceeding. Should I include these two or not? The answer is you have to do it. You have to combine both the payments, because though you are okay. So previous point, this point you missed. This I will tell once we complete this question. I will tell you this question. If my voice is clear now, I will repeat this. Here I am a tenant. I am taking a building on a rent and I am paying 1,75,000 in a year. Okay. Again 90,000 I am paying for the rent of furniture. So I am entering into a different agreements, one for the building, one for the furniture. But if you literally apply the provision, what the provision is saying, 194I is saying only if the payment exceeds 2.4 lakh in a financial year, you need to deduct TDS under section 194I. But it's not exceeding in neither of the cases, right? 175 bola to less than 2.4 lakh. Here also is 2.4 lakh. Should I include these two? It appears to be very small for us, but in reality it's to be included 100%, because the building and these two, though you have entered into a separate agreement, but the essence is that you have taken both together. If that is the case, people created 10 agreements for this roof separately, for this room separately, they can do n number of nataka. But thing is that it is essentially one thing you are taken as a rent, right? So we have to include all. I mean, like, we have to combine both the agreements even though they are entered separately and check if it is exceeding. So 175 plus 90, 165, sorry, 265. So it is more than 2.4 lakh. So you have to deduct to TDS here for the last payment. And someone is asking, should you repeat, will you repeat this? I will repeat. If I am entering into a long-term lease, okay, and I am paying a lump sum amount, I am entering into a lease of 20 years, 30 years, 99 years, I am paying 10 lakh rupees upfront, lump sum, single payment, and this payment will never get adjusted against my lease payments. Meaning, I have entered into a lease with a building, assuming that I am having a big factory. So I am saying every month I will pay 1 lakh as a rent. Initially I will pay 10 lakh rupees as a lump sum payment. So that 10 lakhs will never get adjusted against 1 lakh. So the 10 lakhs whatever I am paying as a lump sum, single amount, is not having a character or color of a rent. It is merely an advance. So there should not be any TDS provisions for the lump sum single payment when you are paying for a lease. Again, if your entity is situated in IFSC, see, for International Financial Service Center, they have all the benefits, guys. So if it is entered in located in IFSC in Hyderabad, you can see in the heart of the city we have this IFSC. So if you are entering into any of these things and that is located in IFSC, you need not deduct TDS under this section for lease payments. Okay, so they have that benefit. Any questions so far, guys, before we go to the next one? Just to make me realize that my audio video is fine and your concepts are also clear. I'm hoping my audio is clear now. Teja, Jaya Teja, is it clear now? Yeah, okay. Because you confirmed, I will go ahead. So next provision is IA, payment on transfer of certain immovable property other than agricultural land. So whenever there is a toka, I bole to interest relating to, sorry, I bole to, sorry, not interest, I bole to rent, right? Rent relating to a land or a building. Same way, L 194 IA, the extension of it is also relating to payment on transfer of certain immovable property. That is also relating to immovable property, but rent. Here it's an immovable property, but transferable, so you are selling it. Every transferee responsible for paying any sum as consideration for transfer of immovable property like land other than agricultural land or a building or a part of the building to a resident transferor shall deduct tax at the rate of 1% of such sum or stamp duty value of the property, whichever is higher if the value exceeds 50 lakh. So I am sure you will find one question in the examination relating to this section. Why? Because the amendment is there. What was the amendment? Earlier, like I have a building, boss, in simple language, I have a building, I am selling it to you for 1 crore. Consideration is you gave me 1 crore rupees of money. Who is paying? You are payer, I am the payee. Okay, when you are making 1 crore rupees to me, because the consideration is more than 50 lakh rupees, you have to deduct 1% of the amount that you are paying to me, and that 1% you pay to the government. 1% you pay to the government, and remaining amount you pay to me. Okay, I'll tell you how and how you will pay it, because you will not be having time, but we'll discuss that. But for time being, that was a provision, 1% on the consideration. Let's assume that I sold this land and building to you at 45 lakh, but the stamp duty value is 55 lakh. Will the 194 IA will be applicable? It was not applicable till last year, but the amendment is that though the consideration is less than 50 lakh, but the stamp duty value is more than 50 lakh, you have to deduct 1%. Okay, that was an amendment. Yeah, at the time of due or whichever is earlier, TDS for compulsory acquisition is not applicable as 194 LA is there. So when I will go back to capital gain. See, I will be touching all the dots, guys. If you enjoy, you will enjoy. The dot is, if I have a capital asset, I can sell it, which is intentionally I am selling my land or building or capital asset, or someone can compulsorily acquire from me. That is like compulsory acquisition by any law for the timing in force by government, right? So if I intentionally sell, 194 IA will apply. 194 IA will apply, which says if the consideration or stamp duty value is more than 50 lakh, 1% needs to be deducted. But government compulsorily acquires my building or land. When they pay me the compensation or enhanced compensation, 194 LA will be applicable. The easiest way of remembering LA is land acquisition by the government. So 194 LA. So you are understanding two sections at once. So 194 I is only rent for the land or building. 194 IA is when I sell the land or a building and the consideration or the stamp duty value is more than 50 lakh, you will be deducting 1%. And if the government is compulsorily acquiring it from me, 194 LA will be applicable. Okay, requirement to obtain. Whichever is earlier, sorry, whichever is higher. So no requirement to obtain TAN. Generally, when we discuss the remaining provisions, if I have to deduct TDS, if I have to collect TCS, I have to apply in the CBDT portal for like assessing officer to get the TAN. Okay, with the TAN only I have to deduct the TDS or I have to collect the TCS. That's it. But these are all seasonal players, pinch hitters. They come and go. So how many times you will purchase land from me or from anyone? maybe once in a lifetime, maybe once or twice in 10 years or so. So you need not apply for TAN, which is generally case for other regular deductors or collectors of tax. Okay, so illustration I'll tell you, you'll understand it in better way. And this illustration I would mark it as very important, guys. 4 mark question you will get it. So you might think that, sir, you are saying it for everything, but there is a potential. Okay, whenever there is a potential, it's good that you solve the questions. I could have escaped this illustration, but this is having a potential of coming in the examination. Yeah, Mr. X sold his house property in Bengaluru as well as his rural agricultural land for a consideration of 60 lakhs and 15 lakhs. So this person, Mr. X, I'll write it in short way for our understanding, is selling house property in Bengaluru for 60 lakh and agricultural land for 15 lakh. By now you are in a better position to say that agricultural land is not a capital asset, 214, so it is not a capital asset, so there is no provision only for that. Mr. Y on this date, he has purchased the house property and the land in the year 2020 for 40 lakhs, 10 lakhs. This he bought it for 40 lakh. This he bought it for 10 lakhs. So difference is his capital gain, and agricultural land, since it is not a capital asset, there is no capital gain. Very clear. Stamp duty value on the date of the transfer is 85 lakhs and 20 lakhs. Stamp duty value is 85 lakhs and 20 lakhs. For agricultural, no issues. And the house property land respectively. Okay, determine the tax. Okay, so now you have to determine the tax implication of both the parties. Okay, so before I reveal the answer, I think you already know it. Few things I already discussed it also. Now tell me, we'll only discuss from the point of view of Mr. X only. What is the tax treatment of a capital gain for Mr. X with respect to house property, with respect to land? Okay, only with respect to Mr. X. Okay, I'll give you 1 minute of time. I told you the reason why I give the time is I can take a little break. So once you do this capital gain for these two parties, then Mr. Y will go. Y ke liye is purchasing house property and is purchasing land, and there is another provision, income from other source also will be applicable. TDS also will be applicable, 194IA. So TDS, I am giving you the answer because that's what we dealt. 194A will be applicable. Income from other source, section 56, 210 something, I don't remember the clause, I think 10 or 9, that will be applicable. Now you tell me how you deal with this. I'll give you at least 2 minutes of time. See, that's unless we test our provisions, we are never good with the taxation. 1 minute of time. It's a break for me. See, I know, guys, at least 4 or 5 people are very serious in the batch. You can try it. If it is wrong also, it's fine. Mr. X, just put in your answer, just put Mr. X directly thing. House property, what you will do, land, what you will do. Mr. Y, when he is receiving 194 IMA, on what value they will charge. Other source may, is there any provision, like I am just giving you a hint, 194 I 56 2 also will be applicable. Jaya, Raju, Jacob, Raja. So you can answer your in the chat box. So then only I will understand, guys. You people are understanding, or I am clear in making you understand. See, the point of class is that only, right? See, after the session, there should be at least a little bit of difference in your understanding of the subject. Raju. Long way to go. 12:30 tak we have to finish. What will be his capital gain for house property? What is his capital gain from land? Land, nothing. I told agriculture land, so I'm making it easy. Now agriculture, just tell me the amount. And numbers also I gave everything. Who wants to take this challenge? After this question, we'll take a break. After this question, we'll take a break. 15 minutes break we'll take. But just give me the confidence that you are getting the subject. I want the answer for this house property. It's a challenge. It's a prestige issue. See, I'm not asking you anything which I have not told. I explained it also because you have done capital gain chapter. .15 minutes break we'll have once you complete this. Nobody? $45 lakh. Okay, this is fine, good, very good. Now max के लिए income from other source में is anything, sorry Mr. Y, does he has to pay anything under income from other source? See, 85 lakhs is a stamp duty value because the difference is more than 10%. Now we discussed that 43 CA. Cost of acquisition is 40, 85 minus 40 is 45 lakh. So that is clear. House property is not a capital asset, so there is no capital gain tax for the agricultural land. And now income from other source, does he have to pay anything? Mr. Y is a recipient of the land, like he's purchasing it. I didn't discuss, but I hopefully you might have studied this provision by now. Quickly guys, remember, how much is he paying? 60 lakhs. What is the stamp duty value? 85 lakhs. So just try to remember, is there anything like that? If you are receiving anything for a consideration free of cost or for no consideration, or a consideration which is lesser than the stamp duty value, this 20 lakhs you will pay, difference between stamp duty value and sale consideration as an income from other source. And coming to TDS provision, what is the TDS provisions for this? Okay, one correction guys, I just said it wrong. I just came out wrong. Someone was asking a question. So just to check the applicability of 50 lakhs, we'll check actual consideration or stamp duty value, whichever is higher. But while deducting it, it's only actual consideration. I'm sorry. So this is 1% on 60 lakhs. Okay. So 6 lakh 60,000 will be 60,000 will be TDS. Okay. I'm sorry, it's my correction. So how many of you would like to have a break, and will 15 minutes bole to 11:25 just done. So can we meet at 11:40? 15 minutes break. Back by 11:40. We will be back by because people are asking break. 11:40, please be back, and don't delay thinking that you will watch it tomorrow. If you watch it live, then only the understanding will be different. Okay, I don't know why, but it will be different. If you watch a recorded thing, it's a different thing. Okay, I'll be back by 11:40. Just take a small break. Hello. Hello guys. Hello. So we are going to the next topic. Payment of rent by certain individuals or HUF's family 194 IB. So generally 194 I is applicable for rent. IA is for sale of property for where the consideration is more than 50 lakhs. This is rent only, but whoever is not covered under 194I. See, 194I will be applicable to individual and HUF only if their previous year turnover is more than 1 crore or 50 lakh, right? For those who are not covered under 194I, they will be covered under 194B. So they will be paying 5%. Any person like individual and HUF, where the payment of rent is 50,000 rupees per month or a part of the month. Time of deduction, they have to deduct at the last month or whenever the tenant vacates it. Okay, so whenever there is a vacation or like they are leaving the property that month, or whenever at the end of the year, like 31st March. Again, for this for them also the provision is same. They need not get the TAN because it's a very rare that they'll be doing it, and it's not like a very, they do it in a volume basis, they do it once in a while, right? So that is the reason why it is applicable only, like they don't need to go for TAN. So what if the last month rent is not sufficient, last month rent is not sufficient for deduction of TDS? So we have example also, I'll tell you with an example. Like last month I'm paying 1 lakh rupees as a rent, but because of calculations I had to deduct 1,20,000 as a rent. So I cannot ask you 20,000 rupees separately, right? What I can say is whatever is my last month rent, to that extent I will deduct the TDS, then that's fine. Okay, the provision is also very clear on this. So we have an example just to make it clear, and I'm going to run through with this example. Mr. X is salarized individual. So as I said, this will be applicable only for an individual and HUF, whoever is not covered under 194I, who pays rent of 55,000 rupees per month, so it is more than 50,000. Mr. Y from June 2022 is required to deduct tax at source. If so, when he is required to deduct and compute the amount of tax to be deducted at source. So June बोले तो June, right? April, May, June बोले तो 10 months के लिए. So 10 months बोले तो 55,000 per month, 10 months, and 5% is the TDS rate. 55,000 multiplied by 10 months multiplied by 5%, so 27,500 he has to deduct while making the last month payment. Last month I mean like end of the year ka last month March mein, whenever he makes a payment of 55,000, he has to deduct to 27,500 and pay 27,500 to the landlord. Would your answer change if Mr. X vacated in premises on 31st December? So if he vacates on 31st December बोलते June, July, August, September, October, November, December, so 7 months, right? So 55,000 multiplied by 7 months multiplied by 5%, 19,200. Is it right? 19,250. 19,250 he will deduct while making the December month rent, like during the period when we are vacating or during the last month. Also, would your answer be, what would be your answer if Mr. Y does not provide PAN? So whenever he is not providing PAN, it is double or 20%. So whichever is higher, bole to double is 10%, 20 is as per set by law. So 20% we have to deduct. So 55,000 per month, 10 months and 20%. So how much it is coming? 55,000 multiplied by 10 months multiplied by 20%. So 1,10,000 he has to deduct. But last month how much rent is making? Is making a rent of only 55,000, right? So he will deduct only 55,000. That's it. There is no requirement to collect it from the landlord. Next, payment under specified agreement 194 IC. 45(5)(a), when we have discussed this capital gain chapter, we have discussed that whenever there is a transfer of capital asset, it has to be taxed in the year in which it is transferred, like charging section 45(1)(a) will talk about it. But now the provision here is, if you are giving your land to someone and who will construct and give back some portion of it to you, or they'll make some cash to you, you remember this provision. So till the time the completion certificate from the competent authority is given to me, I will not be paying tax on this. Now he is a landowner is giving the building to builder. He will build it and give some portions, like assuming that 20 portions are there, 15 portions will be given to landlord and 5 portions he will retain, and along with that he is paying some 20 crores of cash also. So on this amount this provision is applicable in a specified contracts when the landowner is transferring his land to a builder, and the builder in turn is paying anything in cash, not in kind. It's not applicable, only in cash. It will be taxable at 10%. TDS will be taxable at 10%. Okay. Next to 194J, fees for professional or technical services. Fees for professional or technical services, this is most important for examination as well as practical thing. Generally we use this section a lot. There are 5 components on which you might be asked to pay TDS, deduct TDS under 194J. Fees for professional services, fees for technical services, and any remuneration you are paying to the director, and royalty, non-compete fees. Okay, so they have to deduct 2% in the case of technical services, or to royalty where such royalties in the nature of consideration for sale, distribution or exhibition of cinematographic films, and 10% in other cases. In practically, generally it is mostly 10% only, but just in case if you are paying it paying it for technical services or royalty for cinematographic films, you will be deducting only 2%, or any other case you will be deducting 10%. Okay, but again if it is a tele operation of call center, it will be 2%. So I can say there are 3 instances. One is for royalty for cinematic films, and fees for technical services and call centers. All these 3, the rate is only 2%. Others the rate will be 10%. Whichever is earlier you will be doing it, and the limit is 30,000. One thing you have to understand, out of these five, The limit is only 30,000 will be applicable separately for professional, separately for technical, separately for royalty, separately non-compete fees separately. Like if someone is providing all 5, you have to do it separately. But for any remuneration that you are paying to a director, there won't be any limit. Like if even if you are paying 1,000 rupees also, you will be deducting 10%. 1,000 multiplied by 10, 100. And they have decided like overall what all services will come. Authorized representative, film artist, company secretary, information technology, all they will come under 194J. Sports persons, umpires, referees, coaches, trainers, team physicians, physiotherapists, event managers, commentators, anchors, sport columnists, all this will come under 194J only. TPS, third party administrators liable to deduct tax under section 194J. So the case here is assuming that you are going to Apollo or Yashoda for any treatment and you have a insurance policy. So what you do is you go to a third party administrator who will take care of everything, like which insurance company is there, where you are taking the insurance, what is the limit, which services are covered, which is not covered, which treatments are covered, like that. So all conditions will take care of it. So whatever the insurance company paid to third party administrators, so they are also in the nature of a professional services. For them also 194J will be applicable. And income in respect of units, 10%, just like your mutual funds, UTI funds, I said when they buy back of units 10% will be applicable. Here also 10% will be applicable, nothing more to say about it. And if it does not exceed 5,000, there is no need of TDS. Payment of compensation on acquisition of certain immovable property, 194 LA. So as I said, 194 I, 194 IA, 194 IB, 194 LB. So these LA, you can read all 4 at once. 194 I is generally anybody who is paying rent and it is exceeding 2.4 lakh other than individual and HUF if their turnover is not exceeding. And if it is exceeding, they will be paying under 194 IB if the payment is more than 50,000 rupees at the last month of the year or whenever they pick it. IA is whenever you are selling and sales consideration is more than 50 lakh or a stamp duty value is more than 50 lakh, you will be deducting 1% on the consideration. 194 LA is like government is taking it from you and they are paying you land acquisition compensation, they are paying it. So they will be deducting 10% if the amount is exceeding 2.5 lakhs. So remember this in examination, they might say would your answer be different if the consideration paid by the government is 2 lakhs or would it be different if it is 3 lakhs, something like that. So 2.5 lakh is a limit. Income by way of infrastructure debt funds. So this is for income from infrastructure debt funds. If anybody is investing here, they will be paying 5% plus surcharge if applicable and 4% health and education cess. Generally it is for the non-residents. Due or payment whichever is earlier. Income by way of interest from Indian company or business trust, and if it is located in IFSC, they will be deducting 4%, otherwise they will be deducting 5%. If you are taking the loan between these two, like issue of income bond or rupee denominated bond, if you are all these cases के लिए you will be charging 5%. So this is 194 LB. Again this also you have to read it at once. 194 LB, 194 LC, 194 LD. 194 IA I told separately. This is 194 LB, LC, LD. 3 are relating to non-resident and keep it. This is 5%. This is also 5%. This is 4%. 4% if it is located in IFSC. LD is for foreign institutional investors and qualifying foreign investors. And if you are issuing any rupee denominated bonds or government securities, we will be deducting 5%. Okay, so not much to explain here. It is more of a final context, but still, if in any case, if it comes also, LB, LC, LD, all these three are for non-resident. 5%, 4%, 5%. Just remember like that. That's sufficient. And payment made by an individual or HUF for a contract work by way of commission or brokerage or fees for services 194M. So now when you are reading this 194M, you have to understand 194G, 194H, 194J and 194M. So all these 4 you have to read at once just for a better understanding. These 3 who are all applicable, any assessee, the payer is anybody except individual and HUF. So which means that if your turnover is less than 1 crore or 50 lakh, no, individual and HUF are never coming here. They are not coming, but they will come under 194M. Same way 194I also, while paying rent, if your turnover is like 1 crore and 50 lakh, you will not be covered here, but you will be covered under 194IB. Same way, if you are paying any commission, brokerage or any contract related or any professional services and you are not covered under the 194G, 194H, 194J, you will be covered under 194M. So you can understand this is like extension of the earlier standards, like earlier sections. So earlier it was not that, like recently they implemented 194IB also recently they have brought into picture just to make more people coming under the TDS provisions. So again, individuals and HUF who are not covered under 194G, 194H or 194J will come under 194M and they will be deducting 5% if the value is more than 50 lakh. I mean, like this is a high value transaction. Whoever is making this high value transaction, whoever is making your high value transaction, if you are an individual also, if your turnover does not exceed the limits also, still you will be deducting TDS. Again, there is no need of taking the tan, as I keep telling this. There are few illustrations. I am not solving it because we don't have so much of time, and nobody seems to be back. I said we will be back by 11:40. (194N) again, this is also a relatively latest amendment. I think last financial year only they brought it. Whenever you are withdrawing money from the bank and the value is more than 1 crores, so they will be deducting 2% on it. Like the amount is a huge, right? 1 crore, it is exceeding 1 crore. But again, recently again they have made some changes. The changes is that if you don't file your return of income, or you're not filing your return of income for last 3 years, even if you withdraw more than 20 lakhs also, they will be deducting TDS. And this is one of the cases recently come to me also. So it's always advisable to file your return of income even if it is nil, because just to escape from not this here, there are other provisions. They will just looking at whether you are filing your return of income from last 3 years. The TDS here and TCS also, the rates will be different. Okay, so that is the reason why we need to file a return of income. Yeah. So if you don't file your return of income for the last 3 years, between 20 lakhs and 1 crores, it is 2%. More than 1 crore, it is 5%. Okay, so just in examination, the day before, the day of the examination, when you are going, just check this. 194M, 50 lakhs and above. 194N, like generally it is only how much percentage? 2% only. But if you are not filed the return of income for the last 3 years, it is 2% and 5%, depending upon 20 lakhs to 1 crore, 2%, 1 crore and above, it is 5%. And this section will not be applicable when you are making the payment to government. So government is collecting and government only will take it to itself, no? So government always takes that exemption. Banking companies and business ATM operators ke liye it is not cash replacement, that is also ATM operators. Commission agents operating under agricultural produce, in GST we have exemption, no? There also you get this name, agricultural produce market committee, because they deal with the format, so they might require cash, so they can withdraw and pay to them. No need of deducting TDS under 194N. And full-fledged money exchangers, like whenever you are transferring money from one country to another country or taking money, you have this money exchangers, right? For them also this is not applicable if they are registered under RBI. So that is your 194MN. M for expenditure, N for capital contribution, capital withdrawal. It's not an income for you, but just because the amount is more, you are paying 2%, and because you are not filing return of income from last 3 years, you are paying the 2% and 5% depending upon the limit. TDS on certain payment by e-commerce operator to e-commerce participants. See Amazon, Flipkart, Mindra, all these places, you will be purchasing through electronic commerce operator, right? So whoever is placing their products on the Amazon, they will get some money, right? So Amazon will pay them money, right? So when the electronics commerce operator Amazon is making payments to those vendors, like the direct sellers, they have to come under this 194O. 1% of the gross amount whatever the Amazon pays to the vendor, they'll be deducting it whenever it exceeds 5 lakh rupees, and they have to take the PAN as well as Aadhaar. For stock exchanges it doesn't apply, because stock exchange you cannot consider it as a electronics commerce operator, and in a day thousands of crores of transactions happens. No, already there are other provisions like security transaction tax, other commodity transaction tax, different taxes are being levied on these transactions, so you don't need to do again 194O for those transactions. So you can remember like this: electronics commerce operator, O. Applicability of insurance agents and insurance aggregators. So nowadays, like we people take insurance on the website also, right? Policy Bazaar, if I can take one. So they will be receiving it from the customers, and that will be routing through the insurance company. So they also don't have to come under this lens. And e-auctioners also, it is exempt. That is a very vast topic, and it's not relevant at intermediate level. People who have that e-auction facility, they conduct it just to test how far it is going to happen. Auction, but e-auction, for them also 194O will not be applicable. Deductions of tax by a specified bank in case of specified senior citizens, 194P. So this is also amendment recently, so we can expect a question on this, guys. So I'll be spending some time on this. Let's see. Applicability of TDS rates. Section 194P requires deduction of tax at source on the basis of rates enforced by a specified bank being a notified banking company on the total income specified senior citizens for the relevant assessment year, computed after giving effect to chapter 6A and rebate under section 87. Put it in a very layman language. You have already attended 192. What is 192? TDS on salaries. I'm the employer, you are the employee, so I know how much salary I'm paying. I will collect other details from you. I'll check what is your chapter 6 year deductions, rebate, and that I will consider and deduct the TDS, right? Same way, now the responsibility is given to the specified banks. Why they are giving like that thing? When the employer is deducting TDS and paying it to the employee, so I'm taking everything into consideration, assuming that you don't have anything else. So you don't need to file the return of income. Means you can escape or ignore filing the return of income. Same way, for a senior citizen, it is difficult for a senior citizen. It is difficult for him to file the return of income if he is having very less income or specified income, kind of only interest on fixed deposit or only pension, nothing more than that. So what the act is saying is, okay boss, I am telling them only to deduct the TDS for you, so that you don't have to file the return of income. So now these senior citizens whose income is getting deducted under this section 194P, they will not be filing any return of income. Okay, so exemption from filing the return of income, that's not I said it. What you have to do, that a senior citizen has to provide the evidence of proofs, whatever the everything they have to produce it to the specified bank only in form 12BA, BBA. Now the bank will take care of their chapter 6A and rebate all the deductions, and they will deduct the TDS as the case may be, and they have to maintain the book, they have to maintain the evidence also, because senior citizen has given some evidences, right? Bank has to maintain that evidences. So whenever principal commissioner, PCC or CC, principal chief commissioner or chief commissioner asks for information, now the bank or specified institution has to provide the documents to the. It doesn't happen. In case if it happens, you have to provide, that's it, so that the senior citizen don't have to file the return of income separately. There is one question, so I'm escaping it for time being, as you know that we have a time constraint. Deduction of tax at source on purchase of goods, 194Q. So this is the goods it's not generally for goods it will not be applicable. Like you see any section 192 say 194 tak, but this is the only place it is happening because the value is exceeding 50 lakhs. So whenever there is a sale of something and the value is more than 50 lakh, you will be deducting 0.1% of the TDS of the amount that you are paying. So that is 0.1%, like very small only, but government like doesn't want to lose the revenue anywhere. Initially they said that it is not for sale transaction, but they have brought this also into the bracket, saying that if you are making a payment of more than 50 lakh rupees, that excess amount may 0.1% you have to deduct the TDS at the time of payment or due, whichever is earlier. So there were so many questions based upon this, like how can you ask that. Then the CBDT came up with a few clarifications. I'll just read it. Transactions in securities and commodities के लिए which are recognized in a stock exchange and located in IFSC, it is not applicable. Just like any other provision, here also there is some relaxation for them. Transaction in electricity, renewable energy and certificates and energy saving certificates traded through registered power exchanges. So this is also kind of an exchange. Here also this 50 lakhs, because the 50 lakhs is very small for that renewable energy certificates and all those high value transactions. Crores mein it will happen. So it will get disturbing their, it will disturb their business. Bulke they are not keeping this there. Adjustment of GST. So again the same logic we are using for other provisions. When you are selling something, you will be having GST also, right? If the GST portion is separately shown, you need not consider the GST portion. Without considering the GST only, you have to take that 0.1% component. This will come back again. Deduction of a tax at source on benefit or perquisites in respect of business or profession, 194R. So this is the latest amendment, so you can expect a question on this, because out of all M, N, O, P, Q, R, so R is the latest one. M, N, O operators, P not filing the return of income, M for your expenditure like 50 lakhs and above, N for cash withdrawals. So R is of most important, so please pay attention here, whoever is watching. Applicability and rate of TDS 194R में any person who is responsible for providing to a resident any benefit or perquisite, whether convertible into money or not, arising from business or exercise of a profession by such individual resident, has to, before providing such benefit or perquisite as a case may be to such resident, ensure that the tax has been deducted in respect of such benefit at the rate of 10% of the value of the aggregate value of such benefit or perquisites. So what they are saying is, in salary chapter we have studied this so many times. We give monetary benefits, we give perquisites to employees. So whoever is giving that perquisites to employees, they have to deduct TDS under this section 10% of the value of such benefit or perquisites. So this is an amendment where the benefit or perquisite as the case may be is wholly kind or partly in cash and partly in kind, but part of such cash is not sufficient to meet the liability of the deduction of the tax in respect to the whole of such benefit or perquisite. The person responsible for providing such benefit or perquisite has to, before releasing the benefit or perquisite, ensure that the tax is required to be deducted. So just like your 194B, as I said, if it exceeds 10,000, 30% you have to deduct. If it is partly in cash, partly in kind, you have to ensure that while releasing the cash you have to deduct 30%. If the part of the cash is not sufficient, like you are giving a car to your winner of something, so you have to collect that 30%, then only you have to release it. It's sold, as I told in the beginning of the session only. Now the same thing, if you are providing any perquisite to anyone, be it your employer or anyone, and you had to deduct to 10%. So the value is like the cash value is not sufficient to deduct to 10%, or you're not providing any cash directly kind. So you have to collect the cash and then do it. Assuming you are giving a car, the perquisite you are calculating, no other cash component is giving. So you have to collect that 10% portion of it, and then you have to provide this. Okay. So only if it is exceeding 20,000 it will apply. For individuals it will not apply, like as a payer. unless their turnover in the previous year is more than 1 crore or 50 lakh. 195, this is a general section for non-resident. So whenever we specifically said it is only for resident and resident, no, all will come under 195 unless any other section specifically it's talking about it. So any person responsible for paying any interest other than LB, LC, LD, just now I told this 5%, 4%, 5%, no. So other than these, like if it is not a qualified institutional buyer or qualified foreign institutor or all those things, you whenever you are paying interest to any non-resident, you will be charging it under this section only, or any other sum chargeable to tax other than salaries. So why are they saying other than salaries? Because salaries are chargeable under 192 only. You are paying to a resident, non-resident, salary has to be taxable under 192 only. So 195 will not come into picture. Just in case if the examiner asks the question under which section the salaries will be taxable in case of a non-resident. So salary for non-resident will be taxable under 192 only. Any other than salary will come under here. Other than 194 LB, LC, LD, any interest will come here. Okay. So this I explained. Important things, net of taxes we will do it. So assuming that I am paying something to you as a non-resident, so then what I should do, I should deduct the TDS and give the remaining amount to you only, right? But you are like, no, TDS I will not take, you will only bear the TDS. So if at all I have to bear the TDS, I have to gross it up in such a way that after deducting the TDS, his payment is equivalent to what is agreed upon. The remaining amount I had to pay to the government, and I had to issue a certificate to the non-resident. He can take the credit also. No, government is not denying it, but as per your contract, if the deductee doesn't want to be get affected by with the TDS, you have to gross it up in such a way that, like, you do the grossing up, you know, divided by 90%, you do, like, it will go back to the original, and then you deduct it and pay to the government and issue the certificate, and you will claim the credit also. So 197, I told this already. I told this also. See, I am going little fast because we are also running late. And one more thing, it doesn't require more than this explanation. Hopefully you understand this. So whenever you are subjected to tax under any sections like 190, 192, 194 say, so what you will do is you will go to the assessing officer and ask for a certificate, and he will give a certificate saying, hey, for this guy you deduct at lesser rate, or you don't deduct it at bulk. So that I can get it from the assessing officer. Then once I get it, I have to submit to the deductor, and then he will consider that while making the payment to you. It is to me. It is in the same way. He will file that certificate with the CBDT, so that the CBDT will have a round thing. Okay, how many we have issued, how many we have utilized. So they will have the complete picture. So no deduction 197, lower deduction 197, no deduction 197. This I explained. 192A, 193, 194A, 194D, DA, I, K, all this will come here. So whenever you deduct your TDS, no, so that is like your income. You have to pay to the government by the 7th of next month. Otherwise, it will be treated as your income. And credit for the deduction of tax at source. What does it mean? So I'm not reading the section also because it's not important. So all sections are not important. 194, 192, 193, 194 में A, B, 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 C, D, D, A, E sections are important. Otherwise, just run through it from the perspective. Okay, so we'll not be asking on this. Credit tax at source. What does it? If I'm TDS and paying you, whatever the tax has already been deducted, you can take that as a credit while you are filing your self-assessment tax under 140A. What do you mean by that? See, if you're an employee, your employer is paying you salary and they were deducting TDS and paying to the government, right? So while you are filing your own return of income, you can take the credit of whatever has been deducted by your employer so far. So it's not like waste of money. Whatever they have deducted, that you will consider it as a credit. Credit ka matlab you can utilize whenever the tax liability comes, you will utilize it. Generally it is auto populated, but you will utilize it, and sometimes you will get a refund also. So when you will file the statement, so TDS whenever I deduct a TDS, no, I have to pay it by the 7th of the next month, and if that day happens to be a bank holiday or some holiday because of some reason, I can pay it the very next day. Generally people avoid doing that, but that can happen. Okay, but the statement I have to do it quarterly. So payment I will be doing monthly. Whatever the payments have happened during this month, I'll pay it to the next month 7th, but every quarter I will be submitting a statement of how many is payments we have made, under which section, how much we have collected, everything in a complete detail. I'll be submitting a statement. April, May, June. So 30th June के लिए 31st July. So 1 month time is given. 1 month time. End of the quarter से 1 month के बाद में 30th September को 31st October, 30th December की 31st Jan, 31st March की 31st March, April, but May. 1 month is given more for the last quarter, because that is the year end also. You have to close your books of accounts, you have to take care of all other things, right? You will have multiple things if you are coming to the industry or business job. So there will be a time period of 1 month more for the last quarter while submitting the statement. So examination में first 3 months के लिए just 1 month end of the quarter, first quarter 4, 5, 6 June, July 31st तक you have to submit your statement. Generally it is processed by TDS, it is processed by the computer only. They will know everything under which section, what is the rate, what is the limit and everything. So manual intervention is like least nowadays. Everything is happening automatically, and if you make a delay in filing your TDS statement quarterly, 200 for each month it will be levied, but it will not be more than the amount that you are paying it. Okay, so it is amount to whatever you are deducted, assuming 500, but you made a delay of 3 days, so 3 days के लिए 600, but you are deducted only 500, so the fees shall not be less than the TDS that you deducted. So if you fail to deduct the tax, this is again important section, guys. Consequences of failure to deduct a tax, you will be treated as assessee in default. What do you mean by assessee in default? Whenever I don't pay tax, whenever I don't deduct tax, whenever I don't collect the tax as per the requirement, then I will be assessee in default. So all the provisions will come, all the interest will come, penalties and any other consequences is there that will be applicable, but I will not be an assessee in default. This I have explained under section 40A 1A also, if you remember, but again I will connect the dot from there to here. What they say, if you fail to deduct the TDS, or after deducting the TDS not filing before the to the government before filing the return of income under section 139(1), that was the provision, right? You will be treated as assessee in default, but there was an exception. What was the exception? You have made the payment to one contractor, you should have deducted under 194C, but you are not deducted, you failed it. But the other part is so good that he has considered that income is in his total income, he has filed the return of income and he paid the tax on that income to the government. So even though it was your responsibility, it was properly completely discharged by your recipient, that deductee, right? So in that case you will not be an assessee in default, but till the time that you are liable to be deducted, till the time that person deduct the TDS, this period you have to pay the interest. There is no ignorance of interest, but at least you will not be assessed in default. Same logic will apply to TCS also, same logic will apply to TDS also. We can connect these dots to section 40A 1A for PGBP chapter. And if you don't deduct TDS, what will happen? 1% per month or part of the month, like till that, from the time able to be till deducted. So in your deduction, like I should have deducted now, but I have deducted 3 months later. So 3 months delay, right? For 3 months के लिए 1% multiplied by 3 multiplied by the amount. 1.5% for the time I deducted and filed to the, I paid to the government. So you can understand why 1%, why 1.5% difference per month is same. 1% is for the delay in deduction, 1.5% is for delay in making the payment to the government. Okay, so there is one beautiful illustration that I will be solving it once. Guys, how many of you are still watching? I'm not sure, just want to complete this, but is there anyone who is watching now, or I'm just shouting at the window or the door? If anybody is watching, I will solve this question. Okay, I'll continue. This question I felt is an important, so I hope you might get it in the examination. An amount of 40,000 was paid to Mr. X on this date towards the fees for professional services without deduction of tax at source. So fees for professional services बोलते 194J. So you will be deducting if it exceeds 30,000, 10%. So you have to be good with the section also. Subsequently, another payment of 50,000 was due on this date, from which 10% amount of 9,000 on the entire amount was deducted. However, this tax of 9,000 was deposited only on this date. Compute the interest chargeable under section 201 1A. Okay, so you can ask questions, no issues, but pay attention to the topic, because these questions could come for 4 marks. I mean, if you know, you will be solving in 4-5 minutes. If you don't know, if you spend the entire 1 hour, 1.5 hour in the examination also, you will not get it. But marks wise, it will make a lot of difference if you make any mistake in the numericals. So now you see, he has first made a payment on 1st July. Write it here for better clarity. 1st July 2022, he has paid 40,000. Since the amount is more than 30,000 and it is a professional services, 194J के हिसाब से he has to deduct 10%, but he has not deducted. But he made, this is the first payment, one. Second payment he made it on 28th Feb 2023. He made a payment of 50,000. Now total is becoming 90,000. On that, now he realized, I should have deducted TDS. I forgot. Now I'm deducting 10%. 9,000 is paying to the government. When is he making the payment to the government? 22nd June 23. So I can say for 4,000 he should have deducted here, but he has deducted here, right? So 7, 8, 9, 10, 11, 12, 1, 2, 8 months के लिए. So there was a delay of 8 months multiplied by 4,000 multiplied by 1%. So this is the amount he will pay as an interest for delay in deducting the TDS. But from here 9,000 he paid it on June. He should have paid in the next month 7th only, right? There is a delay of March, April, May, June. So 4 months. So 9,000 multiplied by 4 months, sorry, 10% anyway it will come, sorry, 10% already collected, right? 9,000 multiplied by 4 months multiplied by 1.5%, because this is a delay in making the payment to the government. If the delay is pertaining to deducting the TDS, only 1%. If the delay is pertaining to making the payment to the government, 1.5% per month or part of the month. This I also already explained. Time limit for deeming a person. See how long you will wait till you call someone as a assessee in default. 7 years from the end of the financial year in which the payment is made or credit is given, which means that end of the financial year now 31st March 2023. So if you make a payment today is 24th, yeah. So today is 24th March 2023, right? If you make a payment of professional fees 194J के हिसाब से you have to deduct 10%, but you forgot it. Okay, so end of the year is 31st March 2023. You add 7 years to it, so 31st March 2030. By that time, department can anytime come to your house. They can send a notice saying, boss, you are assessed in default for the payment that you made then, for which you should have deducted TDS, but you have not deducted TDS. So now you have to pay interest for all this penalty, everything that comes. More than 1 year, again, other provisions will follow it. But for time being, try to understand this. 7 years you have time. So if you can escape for 7 years from the CBDT, you are escaped forever. 2 years from the end of the financial year in which the correction is made. Whenever you make any corrections, I mean sometimes today you have to do it. You made a correction in 2019 for the TDS statements that you have filed in 31st March 2023. You made a correction in 2019. So 2019 से end of the year से 2 years बोलते 2031. So whichever is earlier, till that time they can call you and they can catch hold of you. Certificate of TDS, just now I said form number 16 they will be giving a certificate, like whoever is deducting that TDS in respect of salary, it is form 16. Any other case it is form 16. In examination or maybe in MCQs you might expect a question on this. If it is relating to salary, they will be deducting TDS, they will be issuing a statement saying, boss, on this amount we have deducted TDS, this is your perquisite, this is your salary. That is 16, form 16. You might have heard it from many people. I am yet to receive form 16 from my employer. 16A is from vendors. Vendors bole to 194C, 194J, 194, everything will come for 16A. Like in form 16A, you will be giving the statement. So when you will be issuing, again this is also an examination question, you can expect this question. Form 16 as I said, form 16 is for the vendors. It is 15th June. So you have to issue for this year 15th June. Why it is 15th June? So this year ke liye statements when you will file March bole to April, May. So they are giving one more time. End of the May bole to 15 days time they are giving to issue certificates to your vendors. So remember, for examination purpose 15th June tak you have to give the form 16 to your vendors. And okay, I said it wrong. Employees, I'm sorry. Form 16 is for employees and you have to give it by 15th June, I'm sorry. And form 16A is for your vendors. You will be issuing it quarterly within 15 days from the due date of furnishing the statements. So every quarter you will be submitting your statement by the end of next month, right? After that 15 days ke baad mein, like quarterly you will be issuing it for vendors. Yearly you will be issuing it 15th June for employees, like form 16. And you remember these sections just now we have discussed. Whoever has attended the session, they might have remember 194 IA is for rent, individual HUF who are paying a rent of more than no, this IA is for not rent. IA is for sale consideration if it is more than 50 lakh, and IB is for rent, and M is for any expenditure which is 50 lakh rupees, right? So for them they are like a seasonal deductors. They are not into business, right? So for them they'll be issuing 16B, 16C, 16D. You remember 16 is for employees, 16A is for vendors, 16B for 194 IA, 16C is for 194 IB, 16D is for 194M. Very rare that the examiner might ask a question. If in case they ask also, you remember the sequence like this. So this furnishing the statement in respect of payment of any income resident without deduction of tax. So there are so many cases that we were deducting tax, but there are instances where we are not deducting tax also, right? When the other person is giving you a lower TDS thing, or when you are making any payment to non-resident under section 195, but it is not taxable. Even though it is not taxable, that information you have to submit it to the government. And one more thing, this 40,000, 50,000 limit is there, right, for interest. Whenever the banks and all these people are paying up to 40,000, it is not taxable. At least the information you have to provide it to the CBDT. It is not for us, it is for the banking channels, like banking cooperative societies. For them 40,000, 50,000 and 5,000. 5,000 is a basic. 5,000 is for everyone. 40,000 is for banks. 50,000 is if it is a senior citizen. Mandatory requirement to furnish the PAN, so you have to compulsorily furnish the PAN. Someone was asking this question, what happens if you don't provide the PAN? So this is a provision, this is the answer for your question. At the rates prescribed in the act, if it is 194I, the rate 1%, 2%, 194J 10%, 194C again that percentage. So whatever the percentage is given in that act, that percentage, or at the rates force in force in the Finance Act, whatever is mentioned, and at the rate of 20%. Have I missed anything here? No, right? Yeah, so 20%. So like that is the highest, but this is 5% in the case of required to be deducted under section 194O. 194Q, you remember 194O and 194U telecom operators, and Q is for sales, 0.1% if the sale is more than 50 lakh rupees. For them, if they don't provide the PAN, it is not at 20%, it is 5%. This is again might be a question, I am repeating. Normally it is 20%, but for 194O इलेक्ट्रॉनिक्स ऑपरेटर्स के लिए, and 194Q is for sale of items and goods, and you are collecting 50 lakh and above, that excess amount of 50 lakh you will be charging, right? That is 0.1%. If the other party doesn't provide PAN, it is 5%, not 20%. So TCS, I plan to take another session, guys. I think we have almost crossed 3 hours, and we have very few people on the live also. So TCS and advanced tax, I'm sorry I couldn't complete in this session. We'll be doing in some other session. I'll be notifying you, or I'll be coming up with another video. Okay, so thank you very much. Have a nice day.